Hello, folks. Trying out a new platform here, as you can see. StreamYard. It's going to be a little bit different and a little bit more interactive, I hope, this evening. Good to see you. Scott Jones, for example, coming in here with a big LFG. LFG is absolutely right. Absolutely right. Can't swear during this stream until at least a couple of minutes in, though, because that's the way we keep the old algorithm happy. How is everybody doing? Hope you're all doing very, very well out there. Got 2 concurrent live viewers. Wow, 3 viewers. They're stacking up. That's an increase of 50% in just a few seconds. Wow, if we can keep a run like that going, then we are going to be looking at some good times. Good times coming up. So what we'll be doing in today's stream, ladies and gentle folk, is looking at Bitcoin and its friends. So if I just, hopefully I can add my screen to this here. Here we have a screen, and what is that? Oh, that's Ethereum. Ethereum has done what we thought it might do. Oh gosh darn it, it's done what we think it might have, and it's gone all the way down sub 1600 actually, and tested this 50% Fibonacci retrace. Now things are not going to start looking good until they start looking good on this one, and of course then what we could be looking at is it retracing all the way down towards our 1500 and something target. That could happen. That could happen. But that is the Ethereum chart. We'll just be jumping on over towards the Bitcoin chart here. Let me see. Can I bring myself into the world again? Nice. Here we have it, ladies and gents. I'm back in the screen with y'all. Hope you're all doing very, very well, like I say. And there's the chart up beside me, but it's all dinky and wee. Let's make it a bit bigger. Oh, is there not another option? Surely there's a better option than this where I can make it bigger, right? Right? Surely there is. Full screen layout, right? Cool. No, I want to have it being a bit better than that. Oh, that's better. Okay, cool. Here we have Bitcoin, ladies and gents, and what we can see is the prices on this one have come all the way back down into this sort of general position type idea that we had the other day. This is a potential sort of setup for us. As we can see, we've actually come in here and would have taken profit on that, and then of course the prices have dropped back down the way. This is just what we spoke about. We weren't actually able to really get into that. Let me just dive up to the 24-hour time frame. Weren't really able to get into that area. Oh, sometimes I really regret hitting the auto button, I tell you what, for the zoom layout going around. Yeah, so we never actually managed to really secure that 57K area, as you can see over the last couple of days, ladies and gents, and we actually saw the prices dropping on down the way there, all the way down to 54,000, followed up by 53,000 actually, and then 53,000 region again today. So we never actually made it all the way down as far as that 52K. This is the exact risk that we were talking about, how you could be taking that on there the other day. Do you remember, ladies and gents? And this is, of course, this zone here showing us exactly where the prices have liked to dip their toes in. Breaking past this would, of course, be quite bad for the price action. We were kind of hoping that if we did see a push down the way, that the 50% would be your next kind of stop off point, but these sorts of trades here, looking at it from a long position, you know, it's like we said, either we start seeing something positive soon, or maybe it's going to go the way of the theory bobs. Let's hope not overall, but what you have here, of course, is this descending triangle shape on the old prices there, that descending triangle shape, and breaking down past this 382, well, then you're looking at further movements towards the downside thereafter. Now, there is, of course, the potential for us to go on up the way and break out. We were talking about this recently. Now we'd have to be looking at a sort of departure point of around 57K to come in for that target up there towards the mid 60,000s. But if we do drop on down the way, then this could see us coming all the way down as far as these key areas down below. And there's this yellow line you might be curious about, and that's a 236 Fibonacci as well, with the starting point of that Fibonacci actually all the way back to the 27th of November. That's right, 30th of November time, in and around about our all-time highs when we tested that 20k, came back down, and then since then never looked back with regards to this long bull run in the post all-time highs period. Now, you do have another big Fibonacci that's just drawn on here, starting off from down at the lows in March. Why is that not lining up? Make that line up like that properly there, all the way from those lows up to the highs, and the 236 on that. Where's the 236 on that? Just making sure that it lines up at the top side. How you all doing out there? Nice to see you, Shivam. Nice to see you, Shivam. Shivam says hi. Hi, Shivam. We also have Scott here. Let's fucking go, he said earlier on. If you do drop by, I'm seeing that there's very, very, very few concurrent viewers, etc. Getting really low amounts of numbers on today's stream. So that's interesting. Let's hope that things pick up a little bit. Then we'll kind of get into things with a bit more enthusiasm whenever there's a little bit more folk around. If not, then that's cool. I can just chill out with my good friend Scott. How are you doing, Scott, by the way? If you're looking right now, you might not be able to type. I understand if you're not. I hope you are having a lovely evening. So that's 32,000, by the way, on that other 236. Obviously quite a ways to go. You'd be looking at breaking a good deal of market structure to get there, as you can see here. So really overall, you know, so long as we stay above that 45,000 area, we're doing pretty nifty in terms of the trend, but not looking good in terms of could we have had a turnaround in the trend if we were to continue to see lower lows and lower highs coming in here as we have been experiencing. This is the 4-hour time frame, and looking in here and seeing where the bodies actually managed to close at. What have we got? It's just fractional, but it's true. You know, the fact of the matter is that we've come in here and had our 4-hour time frames closing out just in the area that you just don't really want to see it happening at, but it's within sort of within tolerance, let's say. As you can see, the prices haven't been managed to be bought back up right up to that level again. So we all know what's the current price there? 53,400. Well, it's dropped a wee bit since I was last looking at it, actually, before when I was setting up the stream and signing into that thing. It was around about, what was it around about? Let's go back to the 15-minute time frame. Must have been up around here, I guess. I don't know. I don't know. It wasn't that long since I started setting up the stream, so no. But yeah, well, there you have it. So it's all exact numbers that we're talking about. Give me a hello there. 45k next move, says Shivam. Well, that'll be one of the talking points. That'll be one of the talking points in today's show. Need to get some more people to come along here and join us for the stream, though, wouldn't you say? I would say so. How will I get a shareable link for this thing? Anybody got a shareable link for it? Then I can just go and drop it on Twitter. We'll go to YouTube myself. And let's see, 5 watching. I mean, no disrespect to all the 5 that are watching, because I've got massive amounts of respect for all of you. That's fantastic. Thanks so much for joining in. But let's see if we can get some more folk to join us, shall we? Let's just see if we can get some more folk to join us. I'll just dive over to Twitter here. And if you want, actually, maybe what we could do is do what we have done in the past. And that, say, if you want me to take a look at a coin in particular, then tweet it at me. But we've not got the people here at the minute to justify that sort of thing. So be sure to get your chat in the chat box. Right. Hello, everyone. I am currently streaming live. Join us for a good time and some good tea. Okay, cool. So maybe that'll get something. I should have put hashtags in or whatever. I'm not very good at the old Twitter sphere. Maybe you could help me out with that if you know how to do it. Let me just see if I can hack the system here and stick in a sort of etc, ETH, XDZ, and say link. Maybe that'll do. That'll maybe do. Right, anyway, okay, so 4 people are here. That's all good. That's good enough. That's good enough. Here for now. Might have to check out in 20 minutes or so, said Scott. That's cool. If there's anything that you'd like me to take a look at, Scott, That's cool that you've got your name up on the screen there and all, isn't it? That's a good laugh. Let's just examine for a couple of minutes here the question that was stuck in the chat by Shivam. Great question. Bitcoin, 45k, next move. Okay, so what sort of things might be bringing us down towards there? And just starting off here on the small time frame, just to point out the fact that, of course, I have seen this little resurgence in price just in around about the key area of which we can see a lot clearer on a larger time frame, such as the 4 hours here. We've managed to get this turnaround just here, turning this low into a wick, and then that's great, giving us that sort of life jacket, if you will. But have we actually managed to really achieve full buoyancy? Not yet. So could we see if the prices were to go between two key areas? Let's the two key areas for us. What really are those two key areas? And actually, it's here at 56,800. So just call that 57,000 is going to be our launch pad for moves towards the top side. And then these two key areas really are these the three key areas really for us are these sort of three zones. Now, these are all tradable events, in and of themselves, and you can trade this yourself if you want to towards the downside, absolutely, and indeed, that what are you doing by doing that? You're taking on a risk by doing that in terms of trading against the trend. Okay, so that's what you'd be risking in terms of the strategy. But of course, it's absolutely possible to do that. And these are the three key areas, which then ultimately would lead to the potential for challenging that area. Now, you said, oh, good to see you, Andrew. You said 45k, and 45k is a nice round number. 45k itself comes in at exactly on that yellow line just there. That's perfect, right? So it's right at the 236 of the move, which is from starting off the Fibonacci that this is measuring against, this 236 in here. What this number is at 45,000 is from the significant low following on from the time that we broke past 20k. Just to bring that back onto the screen here to show you. Whoa, not anymore, just moved it for a second. Right, it's back in place. So this is drawn in from that low on the 26th of November in at around about 16,000. Do you remember the prices came up to 20,000 or so and then pushed all the way back down the way? And that was a scary retracement just as we were coming in for those all-time highs. Well, I've measured that Fibonacci from there, and that's where the 236 lines up at. So that's a clear area that a lot of people will have their eye on at the moment. And that's one of the things that you just have to deal with as a trader. That's just the way this goes, and that's actually one of the topics of discussion that I had in mind for today was exactly that. I was kind of like going to think about things from the point of view of an introduction to a trader. You might notice that I'm taking things a little bit kind of more casually in today's show, and I was wanting to interact more with the audience and get some questions, if there are any, about anything specific that anybody's looking at right now. And we'll still do that, of course, with whatever. But the main thing that I wanted to kind of get across to people about trading is, what are you doing as a trader? What's your job as a trader? And what most people enter into trading thinking is that they have a responsibility to buy when it's low and sell when it's high. And of course, vice versa, in the old 50 million Deutschmarks, I say Helsinki, you hear Geneva style approach to trading. Now that's fine, and it is true, in its most basic operating aspect of it. But that doesn't really describe your job exactly, because that's just airy-fairy nonsense. What you're actually doing as a trader is buying and selling risk, okay? And what I tend to do is to identify for people where the areas of risk really kind of change from, when you're operating from one battlefield conditions to the next, And as Mao Zedong said, the guy that wrote the The Art of War, said that you always want to choose your own battlegrounds, right? Oh, good to have you here. Excellent. Seeing a little bit more chat coming in. So you always want to choose your own battlegrounds, right? And that's a matter of then assessing the risk that you're buying and selling at any given time. And when, of course, the prices come up towards this 56,000, 57,000 area, and any longs that you might be taking in it around about this area down below, you've bought the risk down here that the prices could go lower, as we described with this grey shaded area, and then you're selling that risk that the prices could drop down from this area to somebody else who's willing to take it on from this point onwards. And you can tell that they're obviously taking on greater risk than you at that point, right? When you actually look at the charts and frame things out in that perspective, in terms of your job being to buy and sell risk, as opposed to buy something when it's cheap and sell it when it's more expensive, which is actually an abstraction from what you're doing. This is the core of what you're doing, and looking at it in that way is actually complicating things. Instead, all you're doing is buying and selling risk at any given time, okay? And you find what you want to be doing is to make an assessment of the risk in around about any area that you're operating in, and then act accordingly, right? It's just that simple. Now, that simplicity is actually, one of these beautiful things that takes a long time to learn, like that meme of the chair that's just a couple of planks hammered together versus the other one, which is all carved and lovely, the sort of knowledge versus experience style thing. So that's why, of course, it takes a long time, and you shouldn't put too much pressure on yourself, etc., etc. So, that's cool. What are we seeing here from Scott? Theta broke into the top 10 market cap today. Cool. Let's go check that out. .com. Now, Theta is an interesting one because, of course, it's a video sharing type platform. Now, they don't have full, as far as I'm aware, it's not like the videos themselves are actually on the blockchain. That's a problem, of course, that comes out of file storage, which is why coins like Phil, for instance, Filecoin, recently have been doing fairly well, if you like, in terms of trying to look at this and put reasons onto why things do well, which don't actually exist in reality, such as how this is Filecoin, and that's what blockchain storage is going to really need to have lots of this stuff in the future, etc. Fundamentals. When in actual fact, why this has all been doing really well is because the rising tide lifts all boats. Okay, but anyway, as it happens, and there's things to be said. That's true. Essentially, what I said there is a pretty damn good fundamental aspect of that coin, right? That's so no disrespect for it, but Theta as well. It's not able to do that right now, but it's just a position in itself as being a competitor for the likes of Twitch and YouTube and stuff like that. And it's an interesting one. And I'm not really sure what Theta gets you. T-Fuel, I think, is something that you're awarded for watching videos. Maybe Theta is as well. Maybe T-Fuel converts to Theta. But there's definitely a relationship between T-Fuel and Theta. Anyway, it just goes to show you, I don't really particularly look too deeply into markets and what they really mean for any other coin at any given time. There's just too many of them for me to keep track of exactly all their individual specifics. But I'm pretty sure that's something to do with this one. I tried to get a Theta stream key from them, but they didn't actually give me one. Let's try this actually again just now. Let's go over to Twitter. And it's like something about Theta stream key. Theta stream key. They've got like a hashtag or something that you're supposed to search or post or whatever, asking to get a Theta stream key. Where is it? Stream key, please. Right. Okay. So that's what we want to be saying. Stream key, please. What was it anyway? Stream key, please. Yeah. I think that was the thingies. Right, cool. So I asked again. Anyway, you have to do that sort of nonsense to actually start getting their keys, which to be able to start streaming, etc. So I'm not really sure. I guess maybe that kind of speaks to two different aspects of it. How one, maybe they're going about things the right way and they're not increasing their capacity more than really what they can sustain, and that's an interesting part to their model. Certainly something that's worth considering. Down 10% today, so it did actually manage to do all right. Let's just take a look at that top 10 rank, and we can see here it is number 10, having pushed past Chainlink, which came down to 25.98. We will be taking a look at that fairly soon. $25 chainlink. What are you doing? We did talk about it. We knew that this could happen. Let's just go find Tezos, shall we? Actually, because it's such a laggard in terms of this list. Now, Tezos is a great coin for trading. I recommend it to people for trading frequently because you can watch me talk about it 3 times a week live, ask me questions, and I've not put a foot wrong in a year doing this live now. So, I mean, that's one great reason to stream it, but I'm not a financial advisor. Nothing that I say is financial advice, so it doesn't really constitute a great reason. There's plenty of other great reasons for trading this one, as it happens. Just looking between the price action itself, there's enough volatility there. It's a decent coin for trading, whilst, of course, we've managed to stay within a relatively sane range, as incredible as to say that, operating between the sort of $1 and $4, $5 area. So, you're not getting wiped out so quickly necessarily. Great for people to start trading that one. Plenty of reasons for it. So, yeah, that's cool. Nice one. So, well done to Theta. Here we have Andrew. Hello, just entered long on VET with 5x. BTC paid me a bit earlier. Well done, Bitcoin paying this guy. That's what we like to see. Good one, Bitcoin. Thanks very much for giving your money to Andrew. Let's just take a look at VET real quick. VET, let's just do it versus USDT. In fact, let's do it versus Bitcoin for a second. Mix things up a bit here on the show, shall we? Oh, I never made it back into that thing, wherever that came from. Lovely to see that rise up, operating so nicely. We do know that this is mostly a translation from the USDT charts, the way that these things work. In all honesty, it's the same sort of discussion that we had with Bitcoin. We were talking about being in an uptrend since March the 13th with Bitcoin. That's, of course, the equivalent down here in terms of December 21st. Because of the structure where you're looking at higher highs and higher lows, etc., and all that sort of stuff that was going on there for a long time. But the market only really got interested when the prices went past 10K. Now, and then actually, really interested when they went past 20K. So, that's kind of like where that area for us still is. So we've not got up towards the 200 yet. Now, there's interesting things that can happen to coins when they get close to these areas. And it'd be fantastic to see that happen with VeChain. We could just take a quick look at it versus the dollar as well, since we're here. And that's, just a wonderful story. So, this is the price action for a long time that's led on to those movements towards the top side, really. But wonderful things can happen, really, when you're looking at these things going over here towards 1, for example, which is done similar to VeChain, of course, but looking at it versus Bitcoin pricing, wow, coming all the way up. Now, this is the sort of the equivalent destination, point really that we were talking about before in terms of VeChain. It was about 200. Well, it's about 120 here we have on OneCoin, and then it just flew on past it, coming back in for sort of retests of this zone where we've had previous. That was actually a volume candle that was tricking me into thinking there was a high previously, but we've had, in this zone just here, we had some sort of previous support and resistance, etc. So fantastic, and that can happen. And then when you see people are thinking, well, okay, we are going for a proper run against Bitcoin, then maybe there's a degree of that consensus, if you like, amongst the market in terms of trading both of the things against the two biggest influencers over people's thinking congruently. Okay, so that's pretty cool. So you went long on VET with 5x. Let's just jump back over to VET again then and see, because 5x, we can kind of get a rough estimate of where your liquidation price would be on that one, I suppose, if since you've said it this way, Andrew, and we can we'll just assume whatever. If you're doing it with the dollar and you're up here, prices are 87 at the minute, then if the prices were to drop about 20% or so, then you would be wiped out at 5x. So this is the volatility of the markets that we're in. Chances of that happening from those highs to those lows, pretty high. Now, Was that right? Have I got that calculation right? It's about that, right? I think I've got it about right. So just be aware of that, buddy. Looking down here at the lows, 75 is, of course, a realistic target for us in terms of having come down and challenged this 8 period exponential moving average here in the 24-hour time frame. You can see that when we challenge it, every so often, we go down and we push on down a bit, a bit further. That can happen. So that's something for us to be aware of. Now, we've had a decent day of it so far today. Let's just bring up the 4-hour time frame and see, well, okay, so we had a push towards the top side in here at 94. We've come back down the way again, putting in a doji candle. It doesn't look, buddy, right? Doesn't look that great for your long right now, okay? Because it doesn't really look that great for your long. Let me just bring up this and see, does it concur? Yes, it concurs. We had bearish divergence going to that high on the 4-hour time frame. We got 1, 2, let me just see, 3. Is it on the stochastics? It looks like the stochastics maybe just escaped it. So, you're taking that sort of stochastical type approach to things. Okay, fair enough. Like the ancient Greeks. We've also just had a negative cross here on the DMI. So not fantastic. It's not a fantastic setup, Andrew, I'm afraid. But still, there you have it. Good stuff. Thanks for sharing. And what we could be looking at is just interested to know, I suppose, how that goes for you. Let us know how you're doing with that one. Now, there could be reasons, good reasons, very good reasons, strong, healthy, inspired reasons for why you'd want to go towards the top side. And I'll just give you a couple of them right now, a decent reason. Looking between the high and the low, you can see that we've actually come in here between the low and the high, between the low on the 23rd of February and the most recent high, come in here and tested this 236 and found it definitely, willing to bat for us so far. Fantastic. And since we have already tested this 18 period moving average on the 12-hour time frame, i.e. the 9 period moving average on the daily. So we've already tested it here in the 12-hour time frame. So groovy, looking good for that. Now, that's actually quite serious. That's true. We are actually, what you're doing though is you're going to need to think about your position in terms of whether or not you're willing to get wiped out on that or not with just simple risk management, right? Okay. So it would be fairly simple to say to yourself that, going up above the previous all-time high is greedy. Just if you just want to have a simplistic sort of look at things, like moving down past our previous wick of the day is dangerous. And that's 2.8 to 1. If you actually manage to get in earlier on when the prices were down here, you're looking at 10 to 1. And you can actually extend your risk down. If you were looking at a similar sort of 2.8, you'd actually be able to come all the way back down and test off that 236 properly with the same risk profile on that trade if you were thinking about it from those sorts of views. Now, I'm not a financial advisor. None of this financial advice, and I haven't done the due diligence on this one. I haven't, All I'm doing here is talking. But it's interesting, isn't it, as well? Maybe everybody would be interested in knowing some things like how you can join the Patreon. And not only do you support the channel by joining the Patreon, it will help you become a better trader. Now, we are just starting off here. It's very early days, and there's a sort of upside and downside to that. One of the upsides is that we've got this sort of promotional nice pricing of $25. And what you actually get in terms of that promotion really is that you have access to being able to talk in a group where I'm actually there willing to help educate you on any question you might have. Or, I'm looking at this trade setup. Do you think that there's anything in there worth kind of double checking, etc.? And we could have those sorts of discussions, but also, you get to be a part of a group that can help teach each other. Like I say, just starting off there. So we're not at the hubbub of activity that I would really want it to be yet, but we will become at that point, at some point in the future, that exact thing. Now, if you actually want to get sort of one-on-one help from me, then you get the same sort of idea that Rook Trade. I wonder if you'll join us for this live stream this evening. Was getting with sort of talking to me directly. Now, that's also not a strict guarantee that I can make for anybody. That's not really what it's all about. It's actually about supporting the channel and trying to grow a community, etc. But if you're looking at that and you're thinking to yourself, $25 sounds steep, but then you go ahead and take trades where you could, you're risking more than $25, then you're probably crazy. Anyway, on that front, I would be much appreciative if everybody were to hit the like button. And if you haven't subscribed yet and you're thinking about it, then do that. Actually had done out these things here, so let me just do it as I'd intended on doing before, where I've come, put my little banner down the bottom and tell folk that we'll be doing some Bitcoin technical analysis, etc. Do it for a couple of minutes, move on, and make it so that it's actually easy for people to find this in the video after we finished the live stream, and they're skipping through. So I'll make my screen I'll make me real big and say, hi, we're about to do Bitcoin. Thanks for joining us. Let's take a look at the Bitcoin charts. Then I'll try and make myself smaller. Hold on a second. Oh, there we have it. And here's the Bitcoin charts. And I hope that you can see that fairly clearly. Let me just remove that banner, letting people know that this is what's coming up. Now, I've tried to zoom on in here on this one. I'll maybe even zoom on in, hit the button again, make it even bigger. There we go, make it even bigger on screen. Hopefully you can see what we're talking about more or less here. And the prices at the minute haven't been looking super good. As you can hear, the emergency services outside are not happy with Bitcoin prices either. They're currently below that 54,500 region that we spoke about recently. Now, trades from the 54,500 area that we spoke about on Friday, for example, or Monday, well, last couple of times we've done this, were to be taking, profits in at around about the 56,000, 57,000 region, given that, you're looking at, well, what did we have in here? 56,200 or so. What you're looking at here is a couple of things, like this downward sloping line, which could be representative of a couple of different patterns. We'll talk about them in a second. And of course, the 236 Fibonacci retracement point from the recent highs down towards from the recent lows up to these highs. That's where the 236 is kicking about at. So, a couple of reasons to the profit taking happening. Now, we've seen this liquidity area that you spoke about and highlighted as being, useful for us so far in terms of providing us with those rejection style wicks. As we see, who is it in the Discord that's making a whole bunch of comments right now? I wonder. Bloop bloop. Well, let's hope that they're satisfied. And yeah, so this liquidity area, that was obviously working for us in terms of providing us with these wicks. Now, what we see is that the prices themselves have, liked dilly-dallying in this area just a little bit. And that could be because maybe perhaps what we have here is a descending triangle. And a descending triangle has a measured move pattern off of it, which could take us down as far as the 45,000 region. 45,000 being the 236 Fibonacci retracement point if we actually draw in the start and departure point of that Fibonacci from the 30% drop following the 20k test, back there at the end of November, just before we came in and actually did put in our all-time highs in it around about that zone, and then all the way up towards these highs. That's where the 236 comes in at. Key area for us, of course, if we do go down towards that zone, pushing past 786, etc., to make it down there. Is there anything mitigating against that? Well, there is actually a couple of things. One of which is just this idea of, could we even be in some sort of wedge? Now, you can draw in the wedge whatever way you like. I'm not going to be picking bones with you about it, but we could be saying that there's a sort of wedge on the go here. Now, what happens if you just kind of consider the first part of the wedge? Well, you could maybe be considering that to be a bull flag for us, right? A bull flag is an interesting idea about these times. How could a bull flag possibly work? Well, there's a couple of little ideas that you could tie in with that, such as if we came in down here for a 50% retrace, ultimately then pushed up the way, maybe you'd be tying in the idea of a sort of skewy cup with handle with it, etc. So you could find confluence, if you like, simply based off of the Dow theory, if you like, for the 50% retrace. So there's ways that you could find your whatever confluence you're looking for to say that would be a really good place for the prices to go up. One of which being a sort of the fake out from whatever, that if that's a wedge indeed, and if that's a descending triangle, the fake out territory, if you will, kind of taking down towards that zone, would be how that could play out. And I would caution people then, of course, if they are taking shorts at currently, in order to look for an overall turnaround in the market, to be aware of that 50%. The providence or the prominence, or both of them, given the way that in the recent times, if you look and actually measure this in, you can measure it in yourself whenever you like to, between the lows and then the highs, we've seen afterwards a 50% retrace several times along the way throughout this period of movements towards the top side overall here. Actually, it's happened quite a few times, and that could be what we're experiencing still at the minute, and that's why that 52k area is of course so important. But we might actually be seeing things moving towards the top side. We're actually going to be saying that the most sensible thing to do, whilst you've identified a pattern and it hasn't actually confirmed and broken, then what you're looking for is of course to just be trading it within the range. If you did trade it towards the top side and you're looking past movements to buy that risk of a retrace back into this area and to fail at the risk of failure to take out our previous highs, if you want to buy that risk, the area to do it is that's around about 57k, and what you're looking at there is a move towards 64k. But you're gonna have to get Discord to be quiet somehow here because it's doing my head in at the minute. Bloodum, I don't know if you can hear it or not. Probably not, but I need it to be quiet right now. Messing with my flow, yo. How do I get this? How do I actually do this? Gosh damn, Windows. Let me see. Mobile, all settings. This. Where do I get it? Where's it? Focus assist. What if I go focus assist? On. Right. I bet you that means that they don't want to annoy me with things that aren't priorities. I don't know. Yeah, so if you've identified a pattern on the chart, then the way to operate is to either be trading it within the pattern, the range that pattern defines itself, or of course looking for confirmed breakouts. And until such times as we've really kind of confirmed the breakout above 57k, then it's a bit of a healthy dose of risk that you're taking on. But that would be the area to do that for, perhaps if you're looking for a move up towards 64k, giving you a nice 12% move, $7,000 or so, looking up the way. Between the range, maybe at the minute is sort of 56,500 down towards 53,000. We do need to bear in mind that there is, of course, the fake out potential down towards 51,000. If we do move down past 50,800, then things really start to get stinky, okay? And 45,000, another 10% move is absolutely on the cards. Now, would you want to trade that? Maybe you would. You'd be looking to short it, I suppose, there, and you'd be looking for a move to 45, bearing in mind the potential for, of course, the inflection in it around about the 618 Fibonacci area, not actually achieving the full movement down towards that 236, etc., and their previous market structural lows. And I said, turning around there, that would be, key for you to be aware of as well overall. So that's the current picture, and that's what describes the movements that we've seen. So if you've been trading this today and you've been thinking, why are we trending down towards the downside, then maybe it's because you don't have these sort of simple drawings on your chart showing us exactly where we could be going at any time, and then therefore when the risk scenario may have changed and what you're actually buying and selling as a trader, because your job is to, of course, buy and sell risk, has of course changed. So just be aware of the dynamics in the market. Moving on then, and let me just see if I can bring up that banner again. Let me just see, show here, Bitcoin technical analysis. Up next is Ethereum. I'll just bring up the screen, full screen here, and see if there's any comments to bring in. Up next, not full screen that, full screen me. Hi everybody. Hello, hope you're doing well. Let me know if you are. So next up, we're going to be taking a look at Ethereum, right? Thanks for joining me. Make sure you get your questions in as we move through the charts. Let's just see here what we see. Normies, Robinhood Bros need some diapers after all this red. That could be true, Patrick. Mammoth Yaman says, can we also check RSI divergence all the time? That's a question, right? As identified by that question mark there at the end. Can we also check RSI divergence all the time? Depends. We are humans. We do need to eat, shit, and sleep. However, right, if we're willing to let go of procreation for the human race and various other things, there may be a way that we could work out a rota system whereby we'd be able to achieve something which approximates looking at RSI divergence all of the time. Whether, strictly speaking, we'd actually be able to achieve that. I mean, it depends on what you say. If you're looking at it from a sort of collectivism type of point of view, and a societal approach to this, I think that absolutely we can. If you're asking this in a sort of more modern American individualistic type of way, when you say, do you mean we as individuals? Can we as individuals do that? I'd say we'd be hard pressed for anything extending over sort of 72 hours. At that point, you're probably really looking at needing to take a break. However, if you want to take a look at RSI divergence just now, then we can. Let me just remove your question from the screen, and then, of course, that other banner there as well. Ciao for now on that one, and take up the oscillators. Now, there's different ways of answering your question. Can we look at it all the time? Well, on all time frames, if that's what you're asking, absolutely we can. And you were asking specifically about RSI, which is this one here in the middle. If you want access to these, you can find a link to them in the description. You can get them for free. It's all good. And of course, you can support the channel if you have a soul. So it's your choice. Can we look for it? So what we're seeing here, for instance, is like this kind of idea. And if this is equal lows, then you're seeing that we got lower lows on the RSI between those 2 points. That would be a bit of the old bullish divergence, for instance, if you were. But you can also look for it all the time by saying, well, look at this high here was, of course, higher than our subsequent high. And what we're seeing on the RSI is that this high was lower than our subsequent high. So in terms of, can we find both bullish divergence, regular, visible, reversal, bullish divergence? At the same time, can we also find hidden continuation divergence, bearish divergence on the one chart at the one time? We also can, and that's a really interesting dynamic which you should always kind of look out for, and just over time you'll build up a good deal of experience by looking at it and saying, well, really, when you're looking at divergence, you're also having to look at market structure, right, and price action. And if you're combining these things together, then you can kind of qualify certain things in a certain way where you could say, well, look, we're still waiting for this one to play out overall, so long as this doesn't occur. In which case, of course, your risk profile changes. Like you were previously buying the risk that that the hidden bullish divergence wouldn't work out. Then, of course, when the hidden bullish divergence doesn't work out, then you're no longer buying that risk anymore. You're now buying the risk that some other thing is going to happen. So this is what I was talking about before. You're never just buying something as the asset itself and then selling the asset itself at a later price at a better price for you. That's not really what you're doing. That's symptomatic outcome, hopefully across time, when you're actually buying and selling the risk. Okay, and if you think about it that way, you see the whole world in a better light. Now, yes, you can look for it all the time, jumping up towards the 4-hour time frame and showing you then that, of course, this is a downward trend. I'll just hide the drawings there real quick so you can see lows, highs, lows, whatever, right? Downward trend. And now we've got 2 lows here, lows. Okay, so we're not seeing the divergence in between these 2 lows right now. We're not really. But then you zoom on in a wee bit and you look and you go, well, are we being a bit harsh on the price by calling this a low when ultimately it's only just a yeah, no, we're not being harsh on it. That's just what that is. That's just how you look at it. And you say, well, look, no, it's not there. Okay, we would have wanted something better to happen. We're trying to kind of sugarcoat this by saying that it's got the potential for Class B divergence. Now, it's true that it does, because you can kind of just sort of aggregate these things out enough by jumping up towards a different time frame here. For instance, no, you can't. The 12-hour doesn't. So that's the sort of thing that you can do, though. For instance, you can look to try and say, can I take this philosophy that's just not working, the paradigm's just broken here, and see if it's still functioning on a different time frame, perhaps working in some sort of, and we went through an example of it there now and showed that you can't. So just to answer your question, I hope I've done a thorough enough job on it. I've given you the sort of the comedic piss take answer first off, I suppose, but then also giving you the reality as well. I hope that helps somewhat. Who knows, right? I hope that helps. I read that I could potentially lower the streaming costs of things like Netflix and YouTube. Yo, nice one. Wouldn't that be awesome? But lower it for who? Gosh darn it. Are they going to lower it for us? Or are they going to lower it all for themselves? Yeah, going to have to read into their docs on that one and find out. Cheers for that comment, though. See everyone at 25k, says Patrick Pellegrino. What? Yeah. Mr. Danger's coming in. Yeah. Oh, look, there's me acting like I'm on camera and everything and celebrating that when I'm not actually on camera. Hello, everybody. I'm back here again. Yeah. See you at 25k. XCM analysis for short and medium term, says Avinash Singh. Well, maybe come back around to that. I'll see if there's anybody out there who is, I'll see if there's any other chat first. Hey, right. I can see that you're saying, how are you doing? For instance, nice one. glad we're having this conversation in the right way around. How are you doing? How are you doing? Just like our friend Christopher from Crypto likes to say, the most important question, but the most important question of them all, my friend, how are you doing? Yes, good one. I'm doing all right. Thanks for having you here. Pi Network came along to say NPXS. Well, there you go. There's a bit of a confused nature for you. Pi Network, that sort of MIT proof of existence based blockchain, is in here asking about PundyX, the guys that want to have, hopefully at some point in the near future, will have an Android 8 based point of sale system. Whoa, wouldn't it be good if they could do that at some point in the next, I don't know, I mean, it's what, that's maybe 5 years old, that Android version, so maybe if they do it at some point in the next 20 years or so, that'd be decent. But we'll take a look at them, right? Because they're price action now, speculative value wise. Nice one. And of course, their team is much improved by CZ just coming in there and taking the reins. I mean, I'm of the opinion that Binance are controlling them behind the scenes, telling them basically what to do and sorting them out. So that's good. That's good. That's an improvement. Should I sell my Theta coins? Should I sell my Theta coins? Interesting question. We can maybe take a look at that as well soon, maybe, if we have one. Tight stop loss, says Andrew Gibson. Good decision. Hello, Peter. Nice to have you here, my friend. Good to see you. Good to see you, Peter. Good to see you. How you doing? Hope you're doing well. Nice to see you saying hello to TradeSpotting as well. Nice to see TradeSpotting in here chatting away, of course, as well. Check it out. That, hey, Peter, how are things? Nice one. Exposing the conversation live here with Rocky Outcrop. Nice one. Good to have you here, my friend. I just opened Coinbase Pro. What should I put my first $2,400 into? Well, okay. Nice one. Tip for you. You tell me what you think, right? You could put your first $2,400 into anything at all of your decision, your choice. Or you could join the Patreon, right? Get to know the community, come back for some more videos and all that sort of thing. And whatever method you choose, you'll be probably better off this time next week having done nothing, probably, unless, of course, you know, you make the right decisions. So maybe keep your eye out for that yourself. I'm not going to tell you. I'm not a financial advisor. That's a straight out of the financial advice book there. But I can tell you that if you're looking at that $2,400, if you were to take just over 1% of that, bearing in mind that you'll probably spend more of that on fees. What are you using again? Coinbase Pro. Yeah, you'll probably spend more than that on fees in your first couple of trades anyhow, or 5 trades or whatever it adds up to. I don't know. And spend it instead on, in terms of the Patreon and getting educated, etc., you'll probably be better off, right? But instead, you're looking for a quick win. So yeah, quick win. There's the chart up beside me, just here. This is the chart right here. I'll just give you a quick win. Okay, so what do we have here? What you want to be investing in right now, my friend, is Molina Healthcare. Are they on blockchain? I don't know. Yes, this was randomly selected from those series of letters I just flung onto the keyboard there, but it does actually look like it could have a potential or cup with handle here, some sort of twin peak on the go. Maybe we would see a retrace, having had this high after that, with a potential for bearish divergence. Any retraces we do see, of course, taking out that moving average on the RSI, then I'm looking for further continuation for that, at least that 50% move down the way, looking down here towards 182 potentially as your best buy price, somewhere in that 86 to 82 area, if that were to happen. But of course, things are looking pretty good. Have we got the wherewithal to be able to push past this area here? The divergence isn't so great, but we do have a positive cross still in chop territory, though I'm afraid, looking like we could have a couple of issues for us overall. So counterintuitively, unless we push up, then we don't. You can take this one. This would be a good sell for a momentum trade. I wonder how this goes. Don't even know what markets it's traded on. Let's see. Does it tell me down here? Don't really care. Anyway, there you have it, my friend. Sorry, just my fingers bashing didn't ping up the correct answer for you. Maybe next time we'll get it. We'll get the right answer. Oh, Dan Anthony, if you had to choose one indicator, what would it be? If I had to choose one indicator, what would it be? Oh, interesting. interesting one. It's funny because when you've used things for quite a while, then you'll know this yourself, possibly. Just jumping back over to Bitcoin, then patterns are obviously not indicators, right? So you get a freebie there with that one, right? That's a freebie. We're going to accept that as a freebie. I think that's a freebie. So just kind of looking out for them, but you don't really need. I mean, it's a bit unfair because you've all seen this before anyway in the channel tons of times. Like, I look at the charts and I say, oh, it looks like this is whatever, and then I draw it in, and I'm really drawing it in for everybody else's benefit as opposed to my own. Then also, like, when we look at moving averages, etc., like so often as well, we say, oh, what are the chances that this has done whatever and hit whatever moving average, and things like that. So, like, would we need to have them or not? And the same thing could be said as well for things like tools as well. Like, could we get away with, can we, keep Fibonacci's, etc., or not, because they're tools, right? So a drawing tool, essentially, you're just drawing on the charts, and so it's very much a subjective experience, if you like, if you want to think about it in those ways. So right, it's a hard one. See, right, my immediate answer is the DMI, right? Okay, the DMI, this is the best indicator out there. Okay, sorry, there's your quick answer. I have to give you the respect. You did actually as well, drop me a donation and everything. Thanks very much for that. Really do appreciate it. It would obviously be the DMI. Oh, I've got this. Maybe this is too small, but the DMI is great. Okay, RSI is also pretty great. Now let's be honest. When I read the bit in the top, up in the top there it says RSI on your indicators, etc. It says it up somewhere up there. If I had that thing showing. When I read those three letters, I think really stupid indicator. Always have. I love thinking that way. I'm sorry, it's just like a bad habit. It's kind of OCD in my brain. It's really powerful indicator, and it does the jobs that the DMI can't do, doesn't do. Does a different job to these. Now, the stochastics as well is one of these ones that I hardly ever look in the show, but if you do look back in time and say, well, we had a negative price action here. I mean, you saw the show on Monday, right? And we were talking about this and saying it just doesn't look like it's about to sort of just jump around, does it? And then the prices continued the prices went down a bit, etc. When they flipped around over here, they went up. That's the 26th of February, wherever it is. Here area, they went up, so like you've got like it's good sort of trend, sort of confirmation. Like, am I looking at that trend? Is that still actually in place, etc.? MFI up here, for instance, I don't really care about the MFI. I've got it on here, I guess, because it was being talked about recently, and I liked being able to point out a couple of interesting things with regards to divergences when we were coming up towards these highs in, was it February? Was it last month when I put it on for the first time? Anyway, for example, at these highs, and saying it was the next high on the MFI that we wanted to see that divergence on for that pullback, etc., which is then what subsequently happened. Or else it was up here in some other phase of the market on a different time frame, perhaps, or whatever. I can't remember. I talk about it an awful lot on the channel. So just to kind of come back around to things, they've all got different usages, and there's also ones that I don't use here all the time. It's like, so just wipe everything off the charts here and bring on our friend the Bollinger Bands, and we've talked about these so often in the past with regards to calling particular moves. Now, it's not that the Bollinger Band, and I don't think John Bollinger, the guy himself, is anything marvelous, fantastic. So you feel a lot more comfortable saying that about people who are respected in certain fields when they're dead already. I can tell you that. John Bollinger himself isn't dead. So he's obviously a really smart, successful guy. Good stuff, great, everything, good man. However, I think that what he did here was like a sort of community service type thing by pointing out that you can look at standard deviations from moving averages. It's nothing. I don't think that I think that it's one of these things, like, to pin the credit on him is a little bit whatever. Anyway, the Bollinger Bands, right? And it's great service. I mean, he came up with the idea for these maybe in around about the year I was born or something like that. I don't know. So obviously I've essentially grown up with them anyway, and you can see that there's that while it might not be distinctly useful necessarily just straight out the box, that when you know certain aspects about how these things work, I mean, the idea that we would have seen a bounce on this day retracing back up to 10,500 from the lows at 9,900, giving you that 5% move on the following day's price action, just purely because we pushed outside the Bollinger Band over here, and the chances of that happening pretty good, you know. And like a lot of people who would have lost a lot of money buying at $11,000 or so just to see that the prices dropped all the way down to $10,000, you know, the subsequent day over here, where they could have got in to continue the move towards the top side. Then, of course, looking at sort of the overall trend shift, the fact that we had this head and shoulders in here, so that pattern side of things I was talking about, followed up with this right shoulder that came up, and we could see the Bollinger Bands contracting, but then it pushed down beneath the baseline, the 20 period moving average. Then, you know, there you go. Now, of course, as well, let's bear in mind this Bollinger Band is more than just once. You know, this is just one indicator. If you were to say that you can't have them, but you could have a moving average on top of whatever indicator you wanted for free, then in that case, would I choose the 20 simple period moving average? And I wouldn't, actually, to be honest with you. That's really fantastic. Going to be bringing that message up on screen in a wee minute, Peter. Going to be bringing that up in a minute, Peter. I'm blown away at the minute, but thank you. Right. So the Bollinger Bands, right? So you can see here in terms of the what was I talking about there? Yeah, we had that head and shoulders, and you could have drawn that in the pattern. You know, if we're giving me a pattern for free, for instance, and I'm allowed to keep them, then when we had that high on the right hand shoulder, then of course, you know, combining that, you know, it was nice at the time to be able to combine it with the divergence, you know, that was everywhere. Like literally, look here, on the MFI, yeah, sure. We didn't have it up at the time, but it was there. On the stochastics, yeah, sure. So we had that right hand shoulder in here, you know, and what did we see then following on from that? 20% drop off. Now, is that the Bollinger Band just on its own? I mean, you know, whatever. And also this question of do we get an indicator for free here as well with the 20 period moving average included in it? Let's just remove that here for now and then say, well, how about we wanted to go for something that showed us the key sort of highs and lows? I mean, would I keep the Donchian channels? No, I never would, because this is what I look to anyway. I mean, this is almost like an analog of what I look at when I open up a chart for the first time anyway, is the Donchian channels. You know, like what you should do as a trader is essentially have this sketched out in your brain anyway when you're looking at the charts. Okay, now that might seem crazy, but you should, right? You just should. Okay, it's not that crazy. It's probably I can't juggle, for instance, right? And I've got no intention of learning to juggle, because when I look at juggling, I think to myself, that's too hard. This here is not as hard as that, okay? But just knowing that you should know that is probably the hard part, okay? So I've just kind of delivered that side of things. And then the baseline of this here, I find it quite useful to know where the 50% point is between certain zones. What have I talked about, for instance, then in terms of those Fibonacci retracements and the movements against the highs and lows? Well, we can see that as we broke down past the 50% area, now this isn't expressive of the full high and low, necessarily, although it pretty much does a good job of it. We can see then that, of course, that the 50% area, there's another chunk to go thereafter. We came down towards 50% and we found it, like the 50% area, this is what actually was the 50% retrace pullback zone there at that point. And then we moved up the way and we did the same sort of thing again. So it's useful to have that, but you should also be kind of seeing it anyway yourself. But I find it, you know, I wouldn't want it to not have access to it, because it's super useful. And here's another one as well that I personally can't be bothered with, right? But I use it on the show from time to time, and it's majorly powerful. Like, you know, it's great. It's fantastic. And I use it to demonstrate really key lessons. Sorry, let me just hide the moving averages so you don't get too cluttered up here. So, you know, I talk about this to show key lessons in the market frequently. Now, do I need it necessarily or whatever? Not necessarily. So I don't really bring it up so much. I don't bring it up, you know, on every single show, for instance. But is it useful? It's very useful, very good, very powerful. If you had to take away access to this one for me, wouldn't be that bothered. And check out my video if you haven't already. In fact, it's too late if you haven't already. Sorry, I've removed it. It's for patrons only now. About about the. Oh, you can hardly see that. Well, I'm hoping you can see enough of the chart here. Right, hoping you can see enough of it. The Jimoku cloud. So really probably should have had this bigger throughout this period here. So anyway, yeah, it's got some really useful things in it, but you can see how it's constructed. When you know how it's constructed, then you've got a rough idea of what you're looking at anyway. And then, of course, it's got overlaps. Now, there's lots of really, really good things about it. So if there had to be one that I had to choose, I'd probably just choose the DMI, because the way that the DMI does the maths for it is a little bit more like you couldn't really be bothered doing in your head. It's just a step beyond that. And so there's that. There's ones that I don't ever talk about, but if you had to, what about the OBV? Oh, that is the OBV. Oh, is that the OBV? I thought it was the money flow index. So I've been talking about the OBV like it's the money flow index. So we'll have to put the money flow index back on at some point, if I'm going to be talking about it in that way, I suppose. So what was the other ones? Like, there's ones that I can't be bothered with. Fractals, I can live without them, but it's the same sort of thing. TD sequential, really, a handy thing. Maybe I should use it more often on the show. I don't really. As you can see, when we got that high, it was a 9. You'll have heard me doing the Tone Vase impression. I'd like to see a 9. Or whatever when it comes to this one, and we did get that there at that last high. So nice one, good job, etc. Now, leaves something to be desired here, and left something to be desired here. And there you find, that in markets that are trending, that's often the case. Part of the reason why he doesn't look at it as much in periods where it's really heavily trending, for instance, with Yon Tony. So there's so many. So I don't want to spend all day. You got the VWAP, etc., etc. There's so many things like the parabolic SAR. Handy times are had with that. VPVR, absolutely something which I can live without. I hardly ever have it on the charts, but it's a massive attractor for people to get the upgraded TradingView account, because it just speaks to them so well. And what does it show you? Well, it shows you what you can see if you look between these two things anyway. So if you know what you're looking for, then you get used to it, etc., etc. So I could live without this one, but it's a great one, and a lot of people specifically pay for it when they can get all the other ones I've talked about so far for free. So it really depends. Here's the Hill moving average. Here's another one that I could absolutely live without. I don't really care about this. Why would you? That's bad signal. That's a bad signal. It was green. You can see the trend anyway, etc. But whatever. Sorry. Right now, next best comment here. Look at that. No question, you deserve this. And that is, of course, Czechy Pragies. They're called Prague dollars. 200 Prague dollars there. Thanks so much, Peter, for that. That's fantastic. Really do appreciate it. Nice one, Peter. He sure does deserve it, says Dan Anthony. Check that out. That's it. So I tried to give you a comprehensive answer with that one. Thank you so much, Peter. I saw you doing that, and I just wanted to get around to finishing off what we're talking about. Why is the DMI great? Says Boom Opera Music. Boom Opera Music. Good one. The music is almost in the name itself. Why is it good? It's good because it. Why is it good? I mean, other than all. I mean, wanted to give you like a sort of a elevator pitch type answer, or a soundbite type answer. It's good because it expresses the movements of the markets in a way which the other indicators just mostly flatter to deceive to try and attempt to do. What you're looking at here is a calculation which is based off of not just the like all the other oscillators. Essentially what they're kind of showing you is the trend. Really, that's what they try to look at. That's what, when you break it down, what they try to look at is the trend, right? And the thing with the DMI is it is calculated using the true range, and I think that that's a better reflection of the tolerance of human beings really when they're entering into markets, and kind of transcends questions about, like, percentage moves and logarithmic and whatever else that you might be thinking about at the time. So I think that the guy that worked it out did a good job working it out. That's all I'm saying. It's like, and when it comes to a lot of indicators that exist out there in the world, what they're trying to do without really realizing it is reinvent the wheel, and that they'd be better off having read into what things exist out there already before, or trying to improve on them. Anyway, it's 3 things in one. It's essentially we're 2 things in one. But when you look at it in a couple of different ways, like when I draw in this gray background here, then you can see that there's like little nuanced things in the markets that it shows you, which is quite nice to have. And you can also get the overall strength of trend worked out for you, and it splits apart the sort of the positive and the negative aspect of it. So instead of, for instance, over here in the RSI, invented by the same guy and published for the first time in the same book, so it's like, and he himself wasn't like saying that, well, he kind of, whatever. He didn't say like this is not worth looking at in any way at all. Instead, he's looking at combining them and wouldn't limit himself to just one, etc. Especially as well, if you're willing to do the maths back then, like he was, to actually properly take out your pen and paper and work it out, then you're probably willing to do this one here as well, because you'd be pretty good at that stuff. I'm not. I don't like maths. I didn't get into you don't work hard at trying to become smart just so you can do maths. Nah, Jesus. It's only a complete moron that actually commits to that lie. Let other people do that. Right. Anyway, so this is good and everything, but you can't see the sort of the distinction between the highs and the low, the upper and downward sort of aspect of that, and this splits it into two. So that's kind of cool, nifty. And you get the strength of trend in there as well. But, that's just because these things are all mostly just there for the same. And what you could kind of characterize, a lot of what I do here is I talk about the trend, the direction of the trend that you're looking at on the different time frames, what the macro trend is, the micro trend is, and the strength of those trends, and then also identify areas of divergence. Okay, that's what I do when I look at the oscillators. And what I do is I compare that with price action. I always do price action first, and I point out the main market structure areas and the main Fibonacci retracement points. Now, Fibonacci retracement points, you might think, why do you focus so much on them? Well, it's because it's from Fibonacci retracement points that harmonics are derived. It's from Fibonacci that Elliott waves derived, etc. So it's a when you know what you're looking for, it's pretty nifty. And I kind of make assertions about the price action and say, this is what we're looking at. And then I try to then investigate a little bit more about what we're looking at in terms of those risks and rewards and the trade trends, etc. By then comparing them to the oscillators down below. And the DMI has a nice place there. I think that it fits in quite well. I've got rid of it in the past and brought it on and got rid of it, and probably will do that again in the future. Partly because a lot of people just don't even understand what you're looking at, and you can give a lot of people the wrong idea. I mean, for instance, here we're looking at an upward trend, and it's easy for me to point out divergence. But at any times when we're looking at downward trends, if I jump over to the 15-minute time frame, hit the auto button so you can see that this is a downward trend that we're looking at, and I'm trying to point out, and I say, oh, look, there's no divergence here on the DMI when previously there was. But actually, what we can see here is that so this is obviously then becomes confusing to people when we see that this is the downward trend, the strength continues. This actually came in lower though overall on the DMI when the price action itself didn't. Let me just get rid of that auto button so I can actually move this around a bit. So what you can see here in terms of the 15-minute chart is that this low here was actually lower than the latest low that we've had, and this is actually gone lower than it. It was higher than it, the DMI, the negative DM here. The directional movement. So this purple line here is the directional movement, the negative directional movement. And as you can see here, it's come up higher than the previous times, while the price action itself actually hasn't gone any lower. So what we're looking for here is for the prices to actually push on down past the 52,700 area, or it's just a little bit kind of all for show and maybe things are turning around, because this here is of course showing us that the prices have failed to push on, capitalize on the strength of the trend that it's had there. Nevertheless, what we have is a very strong strength of trend. It's just that it actually has, as we look at it and we know that when the DM negative or the positive in the inverse of this situation is crossed below the ADX here, that there's a bit of a risk on increased risk. Now, what we could see is, of course, if the ADX then curves towards the downside and we've taken out the 40 period, the 40 line level here on this one, that's very negative in terms of the downward trend. It's very positive for upwardness. It's very negative in terms of continuation. It decreases the likelihood of the continuation. Right, so that's the divergences that you're looking at on the DMI. Now, obviously, talking about it like that all the time is just Who's going to do that, right? Who's going to tune in for that all the time? Who's going to tune in for that all the time? Let me just have a laugh here. Well, we've got 17 watching. That's good. So at least, you know. Now, all those 17 people that are watching might not actually want to see me talking about this all the time, but this is a counterintuitive point. What we're actually looking to see is here where the bodies close at. How long have we got left on this one? I mean, it's happening right now, right? Oh, it just happened there now. What time is it? Get me the clock up here. It's just closed. Where's my countdown timer on this thing? Oh, there it is. Wasn't looking at it. So we just closed there. So now what we're seeing is, now that we've actually got that, look, we have closed lower than it. So that's not that. So now what we were doing was making that into that move. Like, okay, so we've gone lower. There's this element of divergence just between these points. I wouldn't be surprised to see sort of a bounce at this point here. But compared to our previous low over here and our initial impulse down, which actually did take us all the way down for an ultimate close lower than that area, then you could say actually, you know, the negative strength, the trend is still there. So look, and we've just bounced back up above the ADX at this point. So, you know, like that's on a really small term time frame. So this rapidly evolves as I'm talking about it. But on a larger term time frame, that's, you know, not the case. And you can make these assertions in the space of the time that actually allows you to act on it. Now, if I was looking at that and not talking and doing a live stream, I could have maybe made some sort of decisions there. And yeah, the prices are pushed down past the 553,000 area just now, you know, and that's like, there you go, that's the DMI. At least that was me looking at the DMI that thought to myself, you know, we're seeing that strength. Where is it going to close? If it closes below essentially what I didn't say, I suppose, is if it closes below this area, then that's just, you know, not good, right? Ultimately, that's what happened. Cool. So, nice one. Great. Excellent. So that was that one. That was that one. That's exactly what I'm tuned in for, says Dude Man. Fantastic. Thanks so much for that. Let's just see. Maybe most people wouldn't, but maybe that's exactly why most people lose money trying to trade, says Dude Man. Now, that's with me talking about how I don't think everybody would want to tune in for that complex reasoning behind that little sort of point in the markets. But as we can see now, 52,490, I think it pays to know this stuff, right? Now, how do you get to know this stuff? Time, lots and lots of time, okay, and tolerance with yourself, and the patience, willingness to forgive yourself. I said all this sort of stuff. Now, where are you going to find a lot of that resource? Where are you going to get a yoke to help you bear the weight of that cross, if you like? Well, that might be here with me as your sort of spirit guide and all the rest of it. So thanks so much for Dude Man and all the rest of it, all of you for tuning in here for that. Now I can be a spirit guide and help and encourage you. Yeah, you can do this. You can do this. This is possible. Is there anything special in my ability to sort of process this information? No, not really. And I've actually gone as far as I can as well to stylistically change the DMI here, just with the colors, etc., that I've drawn on to make it so you can see all of this for yourself. There's another argument to be made with regards to this, and that you could use the fib levels. I tend not to, by the way, but as you can see here, when it comes to this one, I've got it listed up here at 38, 38.2 essentially on this one, and it's 38 or 40, and it's the same sort of discussion that you have across the different areas. I tend to just keep it simple, so to speak, here with keeping it on that level. Keep it simple. Actually, there's me talking and you can't see the screen properly, so lessons to be learned here, I suppose. That's why I keep coming back. I don't hear this stuff anywhere else. Yeah, I don't hear this stuff anywhere else, by the way, buddy, either. That's one of the reasons why I decided to start a YouTube channel in the first place. I thought they're just not doing it right. Now, there are a couple of them out there that I've got respect for. Trade spotting right there in the comments, for example, is one of them. Right, anyway, comments. Oh, I got a new comment. People would rather pay $1,000 for a Fisher Price indicator and have the streamer tell them it's going up regardless. That's true, right? That's true. It's true. It's true. It's true. It's true. Let's just check in real quick with what was the coin the guy went on earlier on? What did we say it was? No, not the $2,400. There was somebody was talking about some coin earlier on. Andrew Gibson, along on VET. Let's just bring it up. So looking at this 15-minute time frame, and seeing that the prices versus USD dropped down a little bit here in the course of the time that we were talking since the last time that I looked at the charts, and bet BTC just so we can see same scenario. At times, maybe it's worth kind of I'm pretty good at educating people. Is all I'm saying. Really, overall, just keep tuning in. Keep tuning in. You'll do well. Join the education thing if you want to learn a bit more, and if you want to help support the channel, then be like these other guys that we're seeing that contribute to the channel. It's funny when you see somebody who's could have easily have lost some money there. So Andrew, and I know Andrew Gibbs is a good guy, right? He's not new to the channel here. I'm just saying that, and this isn't typical of him at all. This isn't anything to do with him, but he said it at 9:15. It's now, that was an hour ago. So here's hoping that you got the best of that, because the prices moved up 6.5%. So I'm assuming that 5.5 long, when you got into 30% profit, you took some of that. You were being 30% profit. That's what we saw there at that point. Now it's dropped back down the way, and you're still in profit. So I'm happy for you. So it's all good. Andrew Gibson isn't necessarily somebody who needs to have his hand held. That's nice to see. Nice to see. So let me bring up that banner again, and I'll actually move through them. I spent a long time answering questions there. It's good to do though, right? It's nice. I wanted the show to be more answering questions and talking. This is maybe what I want to do more of. I've been telling people about the way the price has been going for a long time, right? Let me just actually, before I do the Ethereum one, bring up Ethereum real quick and just show you. I mean, I told people on Monday of last week exactly how the prices would go for this entire time. And did you listen or not? I mean, you tell me if you listened. We're seeing the prices are here, having come down to 1554, right? That's where they were just earlier on. Were you listening in what I said earlier and throughout the last couple of weeks, as I told people that we were going up towards all these different prices? Did you listen or not? Right? Methinks that some people didn't listen. Okay, and that's fine. That's fine. It's maybe that it's not necessarily a failing on their part at all. Instead, maybe it's me thinking to myself like, hey, what you're doing, maybe when I think I want to make this show, I want to make a show which is the type of thing that would have helped me the most when I started trading, and it helps people like Dan Anthony, and it helps people like Peter Hewer, and it helps people that you've seen here commenting in the chat box, etc., and the community that we've got growing and all the rest of it. It helps them loads. But maybe I need to think about like a broader appeal somehow, or indeed just doing something else that I do well. Slightly just shift slightly, because I can help people. I'm sure I can have the same amount of impact, or a new impact, in a different way, if I were to just kind of spend time bringing up the messages on the screen. Tell me it's going back up though, please. Maybe we could do this instead. It'd be more fun for everybody, and we could talk about trading and how it all goes, for everybody in that, and have a bit of this type of a laugh, because I enjoy this. I enjoy this type of stuff, I enjoy it. But I'm going to go back to doing, of course, what we came here to see. If I go right, yeah, good. So let's make myself full screen here, or big, yeah, right. That's Ethereum up beside us already. I can make it really, yeah, whatever. This is good, because maybe I'll edit this after so that people get little clip outs from it. Hi friends, Ethereum prices going down to $1,555. Who'd have thunk it? Well, the Rocky Outcrop community might have thunk it, having spoken about it. Let me see, 1, 2, 3, 4, 5. Oh, 10 days ago, we already outlined exactly where the prices would go. That's good to then see them having gone there, or is it? Well, let's take a look at these charts here and see if we can learn anything a little bit more. Now, I would like to say thank you so much for joining me for this episode. If you would hit the like button, then of course, oh wait, this is Bitcoin technical analysis. That shouldn't say that. That should say Ethereum technical analysis. Then, of course, hit that like button, right, if you like what you're seeing here, and come back for more of this in the future. I appreciate that this is maybe not the easiest chart in the world to see, so I'm going to try and make things nice and zoomed on in for everybody in the world, right? Let's bring the price action up full screen and actually jump up towards the broader term time frame, the 24-hour time frame, and bring the drawings back on again, actually, so we can see what we're looking at. Now, this red serrated line that we spoke about so often, which is positioned without a massive amount of kind of detail. We didn't need to pretend or try and lie to our audiences and ourselves about the ability for somebody to pick the price dollar target to the exact price dollar, to the point that we don't even mess around with much looking at things. But I'm going to say that if there is a price dollar exact level, that we've done pretty good getting down so close to it. What I'm actually saying here is, have we come close enough? Is this close enough? Well, yeah, it's close enough. However, we're now so close to the 618 over here. Let's face facts, right? We could go on down towards 1500 and find the lower end of this symmetrical triangle that we're inside, and then perhaps launch towards the top thereafter. Okay, that could still happen. What does that really mean for you? Well, from a broader perspective, now I'm not a financial advisor and none of this financial advice, but what we're looking at as we're down here on it right now, lovely jubbly. So there we go. If the prices depart from where they are right now, so that's our low of the day in there at 154.55. Take it from me, this is happening live right this very second, that you don't predict things to the exact price dollar. Okay, you just don't. Nevertheless, we're doing it live together. Be sure to join me for a live stream sometime if you're watching this as a clip. What you'll be looking to do is say to yourself that if the prices were actually to drop outside of this zone, we've got a kind of fake out territory which could be quite accommodated. We could accommodate that with any movements actually down as far as the 50% Fibonacci retracement point over here. This is from the broader perspective from a while ago in the past, right? Okay, up to the highs that we had in the market. That's where they're getting their 50% in at. Now, if you were to then take a move from there and great tally-ho anywhere in that red zone, then what you'll be looking forward to take profit at is somewhere up towards the top end of this here, and you're looking at 1,700 region at the minute. I know 1,700, you say, Rocky, when we were at 1,800 so comfortably recently. Well, yes, however, at this 236 zone up here, and where they have this other red line, that's where you can see some profit taken. Now, what does that do if we move past that? It takes us into the next phase of the markets where your risk profile is changed. This is something I've been talking about throughout the live stream today, so it's not in this little clip here, but it's definitely a theme of the show that I've really pushed, is about the buying and selling of risk, and that's your job as a trader. And if we see the prices then actually manage to confirm above this area as some sort of breakout, various ways of doing that, not going to get into the details of it just now. If we see it, then you're actually taking on a different trade really to what it is to be trading within the range over here. Okay, so key for us to remember is that 1544 area that we saw the prices go down to live. Now, when you're watching this, the prices may well be way beyond that zone. Like I said, only a crazy person would look towards exact price points for things to turn around at. And then, of course, if we have continued to go up from that point thereafter, take it from me, that just looking like you're an absolute superstar genius doesn't actually make you one. And I did this live in front of people. So, instead there's other things that you can do to become really, really, really good at trading, as opposed to trying to actually replicate what I just did there. Let that be the man behind the, seeing behind the curtain moment for you if you do think it's okay to not get things perfectly, because that's not actually a target. Take it from somebody who maybe just did that. Otherwise, who cares anyway? Really, it's no big deal. Don't know why I'm banging on about it. This is your zone where you could be going down to. If we find our feet in, fantastic. If we don't, not so good, because you got high, low, lower high there, and of course then you're looking towards market structure. We don't want to see the prices going down towards that 1400 zone at all. We can cope with 1485 there with that 50% retrace, but if we bounce away from there, we bounce away from there, and that's the good stuff that we want to see. Okay, so gonna just check in with my chat, see how they're all getting on, bring their messages up on the screen. Be sure to join me for a stream sometime. Jonathan O'Brien, he's saying fit Bitcoin to 42k, so I'm just gonna have to go and check in with him now. Really? You think so? You think so, Jonathan? That's cool. We spoke about that earlier on in the show. We've already done them a wee bit. a wee bit. You know, we've already done them a wee bit. But you're right, yeah, could go at 42K. Got a couple of big ideas in mind. Now, what we've done on this show, which you're not going to see on other shows, is we've discussed all of the entire roadmap to get there and how it all work. And of course, the entire roadmap to go towards the top side. We've talked about the entire thing. And not just in a sort of, oh, the prices could go up or they could go down way. No, what I do is I lay out the key areas for you to look to, where you need to see things going beyond confirming and closing. I actually tell you how to do that as well. If you're just watching that Ethereum one, I talk about it all the time. And then how your risk profile would have changed, your idea, your mentality as a trader, etc. I actually explained not only the destination, but the route to get there and the psychology on the way, if you like, the music and the snacks that you'd be eating along that road trip already. So go check it out if you've just joined us, by the way. Let me see. If it go below 50, there is no predictions. Well, okay, cool, nice one. We've talked about that in explicit detail. Let me just quickly remind you that there are. Okay, you might not be able to see that so easy. So here, there are. Zooming on in a wee bit so you can maybe see a bit clearer on screen. There are, right? It's all good. But fantastic to have you here. Oh, I would love to make a stab at your name, but I'm going to say Andrew Smith. I think that's how you pronounce it. I think you pronounce that one Andrew Smith. I'm not too sure. Let me know if I goes anywhere in the region, in the ballpark. KDoc means you can save the soy sauce. What's that mean? Wait, hold on a second here. Let's just tune in with the chat for a second. That's the worst part. The wait, right? Hold on a second. Right. Let's go up here. This is one of the reasons why I love these live streams, by the way. Great banter from everybody all the time. My best purchase today was a 12-pack of chicken and mushroom pot noodles from Iceland. Already tanned too, and have noodles sloshing. Scottish banner. Tanned means ate fast or drank quickly. That's hardly a breakfast, right? That's a hearty breakfast right there. Says Tradespotting. At what time is it? 10:30 p.m. Slap some pren on it. You've got lunch too. Man, no, I can't put noodles on a piece. A piece is a Scottish word for a sandwich, or be a piece of bread, if you like. What we got here. I find it hard to wait the full couple of minutes till it's ready. Normally just crunch through. I personally am a very strict pot noodle consumer. I do things. I like, if there's one aspect of my life that I really approach with a ideal of perfectionism, then it's going to be my pot noodle preparation. That's the worst part. The wait. Good to put the water in and go for a pee, etc. To try at least get some moisture in the noodles. Peeing into the toilet and letting that time pass so that there's some moisture in the noodles. You didn't mean peeing directly into the noodles there, but it was a nice little sort of ambiguous way of saying that. Not try peeing in it. Sounds like top tip. Lol. Means you can save the soy sauce. There we have it. Background. You get your electrolytes one way or the other. Nice one. So yeah, fantastic, lovely. Lovely, good one. I thought it was Richard in Russian. Really, I wonder what it is. Yeah, great. Now let me bring up that banner again then, I suppose. We've done Ethereum. We've done it, okay? So up next is Chainlink. So Chainlink technical analysis coming up for you all right now. We'll be taking a look at it on the chart just here. I'll zoom it in a wee bit so you can see what we're talking about. But Chainlink. What do you think? Chainlink, what do you think? Why does the price have to sink down to that area that we spoke about? $25, in fact, on the old Chainlink. And what we're seeing right now is it's down at 24 41. How far have we dropped? And we can see the prices have come all the way down to 23.87. Time to zoom on into that chart. Rocky, perhaps. Let's just bring up full screen. And you can see that we were obviously anticipating that this could potentially happen. We discussed this in a number of ways. I even kind of stretched it out a little bit, put in all the good positive noise and talked about everything about the $29, the $31, etc. Didn't happen though, folks, did it? Because what actually did happen instead was this negative move that we were obviously talking about really as well. Let me just get a measuring stick up here so that we can trace from the top end to the downside here and say, have we done enough? Now, from a textbook point of view, actually, we have. See, the textbooks, what the textbooks will tell you is if you go and check out the patron site.com, that's the site by Thomas Bulkowski, is that you take 60% of that move, more or less, and that's what you're looking for. So really, we can consider it to be satisfied kind of anywhere between 60% and the full thing. But we've done we've done pretty much done the full thing already, but we still have a target down below. What is our greedy target then, if you will, for shorts past, who played this breakout? Now, you actually got a few bites of the cherry over the last couple of days as we were pushing down the way. Sorry to everybody who didn't watch the video then, I suppose, on Monday and actually watched through the live stream and see all the chat that we had about this thing. But if you had it done, then you'd been more or less aware of the need to be closing above $27 and $28 really for that 236, but $27 where that red line was. Now, there's the distinction. Obviously, we spoke about this 236 in here as being super important, and we talked about this red line as being super important, and it was obviously then this zone then, if you will, was kind of the important area. And we see that when we broke this, we actually got a couple of bites of the cherry if you had wanted to take advantage of that move down the way and subsequently, of course, drop down. What this means is that between the high and the low, there was a 13% move to be had. But if you were just happy enough to take 10%, then you could have taken that easily anywhere along the ways over there. Oh my goodness. Oh my goodness. What? But you didn't tell me to go short. I'm sorry, that's not what I do on the channel here. Instead, I just lay out all the technical analysis and the clear areas where you should really be managing your risk. But because I'm not a financial advisor, I won't just say, do this, do this, do this, do that. Instead, I'll say to you, hey, your job as a trader is actually in the buying and selling of risk. And then I'll show you all those different areas where you might be finding that risk at. And on that front, actually here on this chart, we can see if we look down at the 382 in here at $23.50, that between this zone and the next zone, there is, of course, a big drop off in in potential support for us. Bringing the VPVR on screen, just so you can see actually that despite me saying that this is the biggest area of the on the nodes here. I didn't actually know it was going to be, well, I did because I looked at the prices and you could tell by looking at it that that's how that would look. But you take these risks when you do live videos. Speaking of which, by the way, this is actually a live stream that I'm doing right now, so you should come and join me for it. Come and join me for it sometime. There's actually a whole discussion on the go at the minute. Let's just see. For instance, got KDoc. Anybody use Swissborg? I'll be diving back over to that chat in just a minute, but drop me a like as well on this video if you enjoy the content that I put out there, and as well if you get some sort of value out of it, then why not? But this is what we're looking to. $23, big drop down the way here towards the $21, but so large on the VPVR. Are we, despite the fact that we've not got clear area of support and resistance, could we find that there is a sort of quagmire to go through here, etc.? We could go here fairly quickly and then go back up the way through, or go down quickly and go back up through the quagmire again thereafter. Really, I'd just be thinking that managing your risk in it around about that zone there is probably for the best. And overall, what I actually want to see happen is a resumption of the overall upward trend, and we'll get around to talking about that in just a minute. In fact, let me just make this easier on your eyeballs and bring up the charts full screen for us. So what could we be talking about in terms of if this were to actually turn around? A long position from this area where you actually manage your risk down towards that zone can actually see you getting anywhere above that 2 all the way up towards 5, really, movement on this. you could almost go as high as 5. That's a bit rich, but just we're taking this into roughly where our previous highs was instead. Really, you can see that we can get sort of 4-to-1 risk to reward on this if things were to go like, fantastically well. But that's actually what you're saying, is that we're looking for a reversion towards the overall upward trend, the reversion towards the mean, if you like, of the overall upward trend. Have we done enough just here in this zone? Well, if we manage our risk in it around about this, then what we're saying is that closures, etc., that are breaking this market structure here are negative, and we're not willing to sustain the cost or the risk, if you like, as well, of holding on to positions for any movements down the way, regardless of whether it goes quick or not, really, towards those key horizontal support and resistance areas. What actually happened is that we had a movement down the way, we retraced up, we got the golden pocket, and we're waiting for the markets to accept their new reality. What this could potentially be is a higher low. This is the 24-hour time frame. Getting rid of those drawings again, just so you can see quite clearly that we're actually just coming in here and trying to scrape in and close out just higher than it. Could that be the case? And could the overall pattern then of this descending triangle really go beyond the zone that we were originally looking at here of that red line, really, in terms of this smaller triangle, which is real? And instead, could we be looking at the bigger picture here in the 24-hour time frame and saying, well, this is your low, this is your low, that's a high, this is a high, and draw the triangle in around about this on a broader view instead? Well, we could, and just doing that so you can see what you kind of end up with is something along these lines instead, which does give you a potential for fake out territory, etc., up towards those hearts, movement up towards the 618, etc., all that on the cards again, with clear profit taking zones where you should have really have covered your face, your trade should really have wiped its face. Wow, should really have wiped its face if you were to take a long at any point there and leave you in a position where you're not actually really risking anything. Instead of being one of these people who trades with what they can't afford to lose, and thinks that that's all they're doing, actually, what you can't afford to lose is also the money that's on the table so often. Just bear that in mind if you are, of course, leveraged trading in these zones. So that's what we're looking to. If we did get a big movement then beyond this zone, really, what's the scary times? Scary times says 618 golden pocket retrace coming back down towards $14. Who wants $14 though? That's just the price of band token, and band token, that's nowhere near as good as Link, right? Yeah. And then of course it could take us up towards all-time highs. The again, equal high there, equaling our all-time high, coming in there at $37, sort of type of mentality. Right, that could all be on the cards for Chainlink in the near future. Trading the range at the minute, perhaps the most sensible option. Being aware of where your conditions and your risk really changes at. Well, I've delivered that information to you. Now, you actually going ahead and making money in these markets is going to be up to you. I'm jumping back over to the chat. So, let me see. Why aren't they? Who's that saying that? Anyone use Swissborg? No, I've not used Swissborg myself. I've had some of their tokens about 17 minutes once, says TradeSpotting. There, sorry, buddy, can't give you any chitter chatter about that. Your man, what do you call him? That Martini guy. Now he likes the Swissborg. He was recommending them with promotional links, I believe, as well. I'm not really too sure though. Don't really mind. I've got no problem with him using them on his Twitter recently. I'm not too sure. So it was talking about something. Maybe he could help you out. Got no idea. Why aren't they letting you withdraw GBP? Weird that is. Let me get up one of these banners again. So Chainlink technical analysis. Should have maybe have had that up a bit longer during that mode there. I'm not sure. Chainlink technical analysis. Then we'll go and we'll do the Tezos technical analysis, right? Then I'll be able to wrap things up for the stream today. Yes, right. I have my... I'm aware I'm the OG Tezos technical analysis person. Doesn't actually change anything. It's not like the channel grows or anything as a result of that. It's just a fun thing to have as on my sort of track record, so to speak. I recommend this one for trading. I think it's a really great one for trading. I actually quite like the whole thing, the coin and all the rest of it. Kind of makes me laugh a little bit that it hasn't gone up in value lots, but there you go, whatever. And that. But do I feel that I'm getting the best out of doing these videos in a way where I have to do chainlink, Ethereum, and Tezos every single time? Not really. Do I feel like that the people are really taking advantage of the information that I'm putting out there with regards to trading this one? Not really, and it makes me question a couple of things at the minute. So I'm reviewing again as well, like I say, with this new kind of chattier style layout that I'm going for. That, you know, maybe I'll scale back in terms of like having regimented every single episode has got this in it, and just let people request them from time to time. And then if I think something interesting is going on, maybe point it out at the time that it happens, as opposed to pointing out that it's going to happen 10 days in advance and nobody actually making money off the back of that. Weirdly, I don't know. Anyhow, what we can see here is that 467, 467, or 450, let's call it 450, 450, 450. And what was that today? What's our high today? What is it today? 452, bing bong. So what we're looking at here is the top side of the range. At the minute, being in and around about that 450-ish area. And let's just look down here at the lows. We'll look at that. 387 was the low, but we didn't go any lower than that. What's the price currently? Oh, 398. That's interesting that we're managing to close above that 396 so far, should things keep going the way they're going. We have another hour and 15 minutes left on the day, so it's, you know, of course, squeaky bum times in terms of that. But having obviously in the previous episode identified 396 as being the area to look to for that bounces, for the 387 380s area, to be in those low 380s down and breaking past 370 was when things get really bad. But like, we can actually cope with a move all the way down as far as 370, although that would nearly make you want to pull your eyeballs out. Oh, you can't see the chart at the minute. Oh, I wonder if that even matters to anybody. Does that even matter that you can't see the chart? Because like I say, really confused as to whether or not people get any value at this Tezos chat. Anyway, let me bring up a bit bigger. I'll make it full screen, why not? Here we have the full screen. I'll get rid of that banner and everything. Actually, know what? I'll go back to the start. Hi friends, welcome to the Tezos section of the show. Be sure to join me for the live stream. We're having a great time over there looking at the comments all the time. We've got lots of comments coming in from people all around the world, and such as this one. We've got a good bit of chat going on there with KDoc. We've also got other people coming along. XTZ is the luggard of the alts. Well, there you have it. It's coming from the chat. If you don't like those comments floating around and you're in the Tezos community, then be sure to join in one of these live streams sometime so that people don't be saying stuff about your coins. Am I right? Well, let's just take a look at the charts really recently and point out a couple of things which are of note. For instance, we spoke about an area that was quite important in the recent past with regards to the price, and it was in the 450 area. And what we can see is that the price action has actually come up towards that today. We also spoke about another area towards the downside, that if we were to break below the 380s and go down that 370 area, not so great. But of course, the 387 area where we could find the prices going down as far as, and looking to find closure of the days, etc., above 396. And what we're at the minute is, of course, all of those numbers right here, right now. That's kind of what I was getting at. Really makes you wonder if anybody's listening or not, because we actually had this all identified out and have done the entire time. In fact, if Navaneethan's out there watching the show right now, you can chip in there and have a laugh about it, because he knows the prices that this will go to all the time, and he never even trades it. It's kind of a bit of a funny thing. Anyway, you're missing out by not doing that. Wait. I'm not a financial advisor though, and nothing that I say is financial advice. So good to know that nobody's doing exactly what I've been saying, because if they had been, who knows how that would go with the rules. Anyway, what we're looking at is, can we actually manage to push on up and out of this zone? This is consolidation that we're seeing. We're seeing the prices dropping down the way. Of course, we've got the DMI screaming at us in the 24-hour time frame that we could get a retest. So what I want to see is that the strength of trend actually kicks back in again at a point whenever we actually are looking for a retest. Now, what I mean is that I would like to see us actually push beyond the 450 area up towards $5, just so that we can actually come all the way back down to 450 then thereafter, and hopefully even find that operating as some area of support for us, having had it be resistance in this time period, and hopefully see us moving up in a sort of ascending triangle type formation with a break which would even extend as far as something as crazy as all of that sort of distance towards the top side, taking you in as high as 550. Now that would be nice to see happen, but what we actually have to acknowledge is that we've got this drop down. Overall, I'm liking what I'm seeing in terms of like there being an increased amount of volume right here at this point. That's good to see. Can we then actually, get our teeth really stuck into this? Can we really pull some meat off the bone with this one and actually push on outside of this consolidation, whether that's the downside or the top side? Personally, I don't mind that much because I'll trade this thing either way. But of course, what would be preferable to everybody would be that the prices actually did move towards the top side, and then of course, take out all these great targets up the way. Any guarantees in life? No, there aren't. If we do drop down the way from that zone, then there could be problems for us. Looking at this, it takes us down as far as $3.23. Be looking for a bounce perhaps at that 618 golden pocket zone, right in around about that 340, 350 zone, really, if we do push on down the way. Ouch, I know that stings, doesn't it? It certainly does when you're looking at it in terms of percentages, because of course a move down towards that zone is another sort of 15% off, depending on, of course, where you're measuring moving down from. Now, that is actually, maybe worth really hammering home then. If you think that that's such a big, horrible loss, then maybe you should pay closer attention perhaps to the 10% moves that you can have within ranges that are already defined anyway. And instead of looking to sort of play the breakouts, just kind of trade it until such times as the conditions that you're trading in change. Because actually, as a trader, what your job is to do is to buy and sell risk. And that is different to just buying and selling something and then buying and selling it at a better price. Now, if you buy and sell risk appropriately, then you'll probably find yourself doing the other thing more often than not, right? Whereas when you try and just buy low, sell high, then you often find yourself falling foul of having not really assessed the risk properly in those areas. Now, what we're looking at with Tezos is that it's had a bit of a malaise. It's the laggard of the crypto world. Sure it is. We've got this potential for volatility, and what I'm saying is that if we do break down the way, I'll expect a fairly rapid rise towards the top side thereafter. If we do break up the way, I'll expect a fairly rapid rise towards the downside at the meantime. But then again, expectations, who needs them in the world of trading? I certainly don't need expectations. I try to avoid them, and I also hate using the word prediction as well. Let's just hope that overall, in terms of the market structure of this thing, that from the broader point of view, the hidden bullish divergence that we had shown here in the MACD and the RSI, etc., does come in to pay off for us, eventually taking the prices up the way. Oh, I appreciate I should have made the charts bigger there, but whatever. Hopefully taking us up the way and maybe even leading into a bigger move overall, if we can see something like this really transpiring for us. Then what we could see is a move towards the top side that actually comes in around about the $7 area. And it's still on. So times when that starts to look a lot less likely is if we actually push past that 350 zone. Until such times as we do anything like that, we're doing all right. 487 is good. We could dip our toes into that. 396 in terms of like donut-y closures, consecutive ones especially not. Below that, towards the top side, numbers not actually all that hard. $4 where we find ourselves right now. Languishing, question mark, I don't know. 396 is actually where the price is. God, the numbers, why is it not 397 or 394? No, it's going to be 396 because that we've talked about it, and it would be unlike Tezos to not do exactly the exact things that we're talking about at any given time. Anyway, looking towards the top side, 440, big region for us. 420, really, let's be honest, is going to be the next area to be aware of if you're actually looking to take profit. Why would you be thinking like that? Well, 5% is actually enough to be satisfied with for most sane people in the world. So yeah, and then the next target up the way is the next 5% move up. Beyond that, the risk for an additional 5% and an additional 5% thereafter is greater. In fact, actually, to be honest with you, if there's a risk, this is your first 5%. Great, groovy, easy. This is the next 5%. Great, groovy, easy. The next 5% here is the hard one. Then pushing past that, the next 5% up the way or more, absolutely, you know, you can talk about that. Another 10% perhaps then at that point. But there we have it. That's actually all the TA that you'd actually need to trade this thing, really, or at least put your brain into the right format. Things that you should look at yourself probably be, if you want to, you could look at the OBV, not that bothered myself. You could look at the MACD there, but the histogram, great. Find if there's any sort of divergences that you want to be aware of, etc. Or if we get, you know, great pushing on, like breaking past previous structural areas and trend lines on these things. For instance, RSI want to be breaking past any sort of trend lines on this one and moving out the way here, in the same sense that we're essentially consolidating in that zone, etc. Plenty of stuff that you could do. So I'm sure, like, you know, that you've got some capability of TA. If you don't and you're looking for better lessons in the world, then of course, you know, you really ought to think about joining the Patreon channel. You'll find a link to it in the description down below the video. And of course, if you're in the Patreon, then I'm 50 times more likely to help you. And that's really kind of a funny thing to say, because I've actually been helping people non-stop since I started the channel anyway, I suppose. Let's just finish off the Tezos video section here with, I don't trade Tezos and don't plan to anytime soon, but I feel like I get value from the reputation of your TA in different situations. Well, that's great. That's fantastic. Thanks, dude, man. Now, actually, when I first read this in my head, I read repetition. That's whenever I got to reading it out loud, I had to go reputation, because the repetition of the TA is actually really helpful as well, I think, probably. Now, yeah, great, fantastic, thanks so much. And then repetition, and it was what you meant to say. Ha, excellent. Yeah, I find that, right? Now, the reputation of the TA should be there for people to see when it comes to Tezos. I mean, we gone done some stuff with this one in the past. Right, that's cool. Can you give Vet a mention, please? Jonathan O'Brien, my friend Jonathan O'Brien. I've given Vet a mention already in today's show, but I did it from the point of view of somebody who just went 5x long at the time of you know, just when they commented, and then an hour went by, they made 6%. Now, I'm not sure if they actually took that 6% off the table or not, and the prices dropped back down the way again. Let's check in with it now and see how it's been getting on since. Oh, I'll make it full screen as well, shall I? Let me just get rid of this here. I'll maybe make a clip out of this one. Hi friends, doing a live stream right now, but I'm making this clip because Jonathan O'Brien says, can you give Vet a mention, please? Well, let's give Vet a mention, shall we? We'll take a look at the charts real quick. My name's Rocky Outcrop. I do professional grade technical analysis all the time here on YouTube. Come along, join me for a live stream sometime, and we can discuss whatever you want. I've also got a Patreon, and joining that gives you access to educational stuff and me and the Discord, etc. But anyway, without further ado, here is Vet, VE chain, the Vet chain. Well, what have we got on the go here? 15-minute time frame, not looking super fantastic in terms of these highs and lows. The extension between these areas, though, gives me the impression that we could be seeing some bullish divergence on the MACD. Just between these last two lows. Yeah, so we've got a little bit of the old bullish divergence on the MACD. That's because, of course, the price action itself looks a little bit wedgy, right? So these are the sorts of tips that you get when you watch the channel. Bring the price action itself up full screen. These are the sorts of things that we talk about, so that you get to be able to sort of really see the dynamics of the markets just by looking at the candles really alone, and then adding in your additional stuff thereafter. Hopefully, by the way, when you do your technical analysis, you use what I think about as the Popperian method. It's a scientific method for technical analysis. What you're actually looking to do is to prove yourself wrong. Disproving yourself is a much more effective way of doing science than looking for confirmation bias. Right, anyway, you know, I could be a part of this video, but I'll take Jonathan and myself out of it right now as we continue on the way. So there's a few other things that we want to look at right now in terms of the broader term time frames, though. The 4-hour time frame, you know, we've got this low here, this high, which is obviously lower than the previous high, and now we've come in and put in a low. The wicks came down and tested and gave the opportunity for us to be actually closing out the day even down at these areas of around about 82. We've actually seen the prices drop, pulling back up so far. That's quite nice to see. Could that lead to some more positive price action for us? And you know what? I'm going to get rid of the OBV here because it's just taking up too much screen real estate. What we could be looking at here is, of course, this ADX having moved below 25. And while this has crossed negatively on the 4-hour time frame, there isn't the strength of trend there. That's actually evaporated off the way, going down the way and sanitizing our thoughts. The negative strength of trend, you know, is just trying to get past that 25 zone here, just trying in the current hour time frame. Had a big pullback. You know, any sort of turnaround in prices from here up the way could see this rapidly devolve away from positive to negative again. Of course, here in the 15-minute time frame, we're going to see this is very strong so far towards the top side, you know, but there is a potential for it to turn around, having had the DM negative operating below the ADX down there, below the 30 line as well on that. Now, but going up the way, you can see that what our real concerns are really for this one are expressed here in the 12-hour time frame, where we're hoping that this downward slope and you know, just what we said there now about the negative side of things, same story here in the terms of the 12-hour time frame with the positive, you know, this dropping down below 30, and of course ADX sloping down the way. So bringing up the 24-hour time frame and seeing that is actually, you know, having had a couple of tests of this zone, but we're ticking up a little bit at the minute. We're still kind of leaning up the way, and everything's kind of still positive, is a good thing. We need to see that continue. Could it, of course, change? Yes, it could. And the key area for us to look out for if we are looking for a change is going to be coming in here at this 236 area. So actually at that point, what you'd have is going past a major inflection area in the markets at the 236, which could cascade the prices on down the way, actually taking them on down potentially as far as, and I have to scroll quite a way to get there, 49 up to 51. So that is, of course, a huge chunk off from the prices, nearly 50%, 40% drop down at that area. And of course, this inflection in the markets just there. But also what that would be doing is taking you know, confirmation here on the 24-hour time frame, extending towards the downside. That could really, you know, push on down the way, and that could take us on down to that next level as well. As you can see on the 12-hour time frame, we didn't get the inflection you might want to have seen at the neutral line really quite yet. So that can tighten up what we're looking at in a good way. You know, that can tighten everything up quite a bit. That, okay, when we know that there's a clear area that we want to stay above, so we can stay with the trend and try and stay with as our friend for just now in terms of all the time frames adding up to that 24-hour one. Well, actually, in terms of, you know, the 2-day, the 3-day, etc., it's all there. You know, we're all looking with that eyes on that prize. That's your best entry price as well currently over the next few days if we find support there. But right now, with regards to today's story, what we're looking for then is, can we have that reversion back towards that trend? Can we, or will this negativity we're seeing here play out? The negativity is expressed more or less the same here in the stochastics with that slight turnaround. Could that be the case? Now, if we do see an upward side, what's the narrative going to be behind that? And it's actually expressed here in the RSI for us. If I bring that up a bit bigger for you to see, the RSI is this guy here. And as we put in this low here, you can see there's a low on the charts. If you're looking there on the charts, right? And if you look down there at the oscillator, there's a low over there in the oscillator as well. But this low is lower than the previous lows, whereas the price action is very much higher. What that is hidden bullish divergence. Now, with this high that we came in, we were quite a ways away from our previous high. Just, you know, make this bigger so you know, no need for scrunching your eyeballs up here. What if we, you know, this high here, we were quite a ways away from that high while the price action was going up fairly rapidly towards it. That was a kind of a result of a lack of selling really at that time, as opposed to necessarily the buy-in, which is why we've got this slight weakness here in the RSI. But that's because we didn't really make it into the bullish control zone, you know, tying in nicely with that narrative about the bulls not really being the ones pushing it enough up at that point. And why might they not have wanted to do so? Well, in the face of that lack of volume really up above, for them to be able to fill their boots, they would have needed to have bought it at higher prices in around about this zone in terms of how that would have been reflected on the RSI. And what that would have meant is that we would have come up there and been conceivably really, really, really close to getting a big dose of bearish divergence, which nobody would really want to see in terms of the overall price action. Now, why would that be bearish divergence? Was, like I said, isn't it, that you would have thought you would have found is that the prices would have moved up towards the top side with a lack of that buying pressure actually pushing them up. And then when they got to an area where they were then having to buy up to then indeed break the market structure and push on the way, they might have been unwilling to do so. And by they, I mean everybody who's kind of participating in the markets might have thought, maybe I'll just wait and see if somebody else does it. And unless Peter pays Paul or etc. and actually pushes the prices up at that point, well, then what you're looking at is that bearish divergence playing out. And that's the narrative for you about how these things are so often created. So that's why, of course, then the price action, having not done that, counterintuitively is actually a decent thing so far. Now we are below the negative line, the neutral line on this RSI just here, and that's not ideal, but market structure wise we're doing okay so long as we don't close down where we had the opportunity to close there. So if I look at the time, we've just made it past 11 p.m. as I'm actually filming this, so it'll be interesting for you to see how we close out the day. If we do push on down the way thereafter, then the narrative actually continues. Why I'm talking about this in the 4-hour time frame and I'm actually mentioning the close is because really, if we continue to push on down the way, we'll be seeing it on this time frame first. But we could then, of course, turn around. Now, if we do, what are the key areas towards the top side? Now, we know that we're operating in a range between the top end of that Fibonacci retracement there and the 236 down there at the 78 area. We know that that's the range, but we also have, a couple of little sort of, intermediate ones, and we know that if that if we do actually break the bodies of this over here, that we're breaking the 236 of this Fibonacci, which is a retracement against this move. Now it's this move that we want to retrace against to actually go on and put in the highs, and what we're looking to then is actually in terms of our next target towards the top side, should we actually resume the bullish trend, is coming in here at 172, 144, and 1618 Fibonacci retracement points. That's 107, 111, and 116. 10 cent, 10.7 cents, 11.1, 11.69, 11.7 cents. That type of idea. Those are what we'd be looking at if we can push on, and that's what you would want to see if that's the Fibonacci that you're actually talking about right there. Now, of course, as well, that's not the entire story as well with regards to Fibonacci's, because there are, of course, this low up to this high to look at, and acknowledging that what we're doing here is coming in for a golden pocket retrace. Now, if we actually break this zone and push on down the way, then we could come on for the 786. We could do all sorts of horrible things, and actually, we'll be looking down towards these three targets. So if you're actually looking between, trading, either you're trading in the range that we've got at the minute, that's obviously regions are bound by the 10 cents and 7.8 cents region. If you're not taking trades specifically to within that zone, then you're looking up either between those higher targets we spoke about up towards 11.7 cents, down towards these targets 74, 72, and of course as well 69 coming in with a mention on that one towards the downside. That would be your 1272, your 1414, and your 1618 in there. The 1618 being important because of course that is the 618 would be if you were to take a measurement here and say between this low and this high, go up 68% of the way, and then which is whoops Mr. Bean technical analysis over there for you. Whoops. Right now, which is about here, right? Just remove that. Then you pop that onto that low. Then what you're looking at is the price is coming down towards that 69 area, and that's how that is kind of calculated and why that what you're looking at there. And you might as well talk about this in terms of the if you drink the amount that I know the proportion of what you're looking at in terms of if you were to have, for instance, eaten too many bad things. I don't know, whatever. Forget that analogy. I'll just have to edit it out because who cares? That's the science behind that. Right, moving on. So we took a look at VET. Okay, great, nice one. Thanks for the info, thumbs up. Right, cool, nice one. So finishing up the episode, thanks for the info, thumbs up. If you also got any value out of that VET analysis, do like Jonathan there and hit the like button. I really, really do appreciate it. Crypto Planet, hey mate, good to see you. Nice view there. I wonder if that is actually you in your picture there. Bears are out, says Crypto Planet. That's right, the bears are out. They're very much out and about. A shout out to the bears. Yeah, let's take a look for the last couple of seconds then at Bitcoin. What did you say, Rocky? The last couple of seconds? Yes, the last couple of seconds. I'm done here, ladies and gents, with the show for this evening, really pretty much. A couple of things that we did talk about recently are that price target. I mean, really do appreciate the likes of Dan, Anthony, and Peter Hewer contributing to the channel today. Really do appreciate it. But I only have so much energy during the day, and if you watch this live show, you'll see how I essentially laid out this exact scenario happening. So go back and watch it, and then you'll be able to watch that and think, I bet you any money if Rocky had been looking at that screen at the time, he'd have traded between those two zones and just taken that scalp move. You know that he was talking about there? Probably, right? You probably look back and see how I was looking at it at the time and how I spoke about the price action as we were going down past this area. There's a time when I was on the 15-minute time frame, for instance, and I was talking about it. Or don't, if you don't want to. That's all good. Maybe you're watching the whole way along. Anyway, obviously, I only got so much energy in the day. Starting off a huge cryptocurrency project. Invite all of you to go and check it out. You can do that quite easily over at picnic.network. So this is picnic.network, and I've got a website up here. I should say we, because there's more than just myself and the team. You can see the proposed screen designs, etc. You can understand what the general principle is behind the two different tokens that we're talking about. You can see myself and, of course, my brother there, the two of us setting this up here, the team so far. I expect this team section to fill out quite a bit once we've moved past that, and also be an advisor section as well, and the members of the community out there yourselves can get involved in all of that too yourselves as well. So anyway, I have to balance sort of my energies that I have for doing any given thing in the day out appropriately, and well, there you have it. So great. So I hope that we can make this channel grow and that everything goes well for it. If we get to nice targets that we're hoping to achieve with regards to Patreon subscription, then I will keep doing it. If we don't, then we don't. No harm, no foul. That's fine. I'll keep doing what I'm doing for the rest of the year. But if we don't get to a certain amount of Patreon members, numbers not fully disclosed, then the fact of the matter is I'll just stop, and that's fine, because it's quite clear at that point that it's that my time would be better spent doing other things, and that while I've helped an awful lot of people to get an awful lot further along their road in terms of trading, that there isn't actually the demand for rocky outcrop out there, because it's a supply demand thing. I'm here with a supply. I'm telling everybody what the chat is, and if demand wants it to happen, then it'll happen, and if it doesn't, then it doesn't. So I would encourage everybody to go ahead and join that, www.patreon.com/rockyoutcrop, if you want me to keep doing it. Anyway, I'm also working on other projects all the time too, that being one of them right there, with, of course, this guy here, Trades Button. He is a good guy, and he is working on that with me. So anyway, just so you know, everybody's warned and all the rest of it. So I would go check out the Patreon if I were wanting this to keep going. So 9 patrons, love you all, loads, love you all. $276 a month. fantastic. Really appreciate that. This isn't going to keep me doing this into 2022. Let's be realistic about things. I'd have made $276 on that trade if I'd just taken it instead of making this episode this evening, for example, as an example. So obviously we need more of this, and I'm not, again, no harm, no foul. This is purely this is a capitalist thing, whatever. Anybody, if it's the market tells me that the demand just simply isn't there for it, that's totally fine. That's totally fine. I'm not going to take it personally. But nevertheless, there it is. So there's that. If anybody wants to let me know about about anything that they want to take a look at or whatever, time's now to do it. Oh, Nav and Ethan, good to have you here. Oh, you subscribed. Look at that. Check it out, everybody. Yes, give Jonathan a nice welcome, everybody. Give Jonathan a welcome. I really do appreciate that. Nice to see you all here. Yeah. Oh, great. Nav and Ethan, you'll rewatch it later. Excellent. No, don't worry that you're late. We'll rewatch later. This guy here, Nav and Ethan, by the way, this Nav and Ethan guy, I always appreciate him tuning up. He's always such a positive guy. Love him. So anyway, yeah, check it out when you're rewatching it later on. Nav and Ethan, for example, today's show's been quite good, man. It's been quite good. I think it's been a good show. I've enjoyed it. I think it's been a really good show. Right? I've enjoyed it. It's been a really good show. You know what? I love the audience. It's the best audience out there, and it's really fantastic to have you all here. And I really do appreciate every single last one of you taking the time out of your day to spend it with me here. It's fantastic, and I'm making this friends and everything along the way. This journey has been excellent so far, so I really do appreciate that. Just so you all know, that's all I was talking about, the whole about my plans for the future. If I were to stop doing this and the future will end, whatever. And it's cool, it's totally fine, because everybody who does take part in the community is like, man, this channel's going to explode at some point. It's just the quality of information here, blah, blah, blah. Everything's so great. The community is such, everybody, we're so positive all the time that we all think it's going to explode. But if it doesn't, right, we all have to stop deluding ourselves, okay? We might just be this little cohort of crazy people. Or maybe, something else is happening that I'm not aware of, I'm just not, ignorant to it. And that's all good. So I can, I'll read the room towards the end of the year or in the next couple of months, I suppose, anyway, with all of that. Nice to have had you here, Drew. Thanks so much for tuning in. Oh, love the comment highlighting Snazzy. Yeah, this is something I'm trying to do here. Now, there's a problem. Like this is full screen, and it's still not as good as my layout when I'm using Streamlabs. It just isn't as good, in my opinion, right? And then if you want to have me on the screen at the same time, its layout, it's not ideal. It's just not ideal. It'd be good if it was. I'm doing it. Maybe it's because it's like sharing my full screen. Check out my desktop background, by the way, ladies and gentlemen. That's right. I yeah, I like Rocky outcrops. By the way, I've got two monitors, and this is a big widescreen Rocky outcrop. Well, it's not. It's not an outcrop at all. It's a massive range of mountains, but it goes across both the screens. It's lovely. It's truly lovely. Anyway, what am I doing here? Yeah, I'm just trying to say cheerio to everybody, essentially. So I've got this new layout. I'm not too sure if I'll stick with it or not. But if I bring it up full screen, you can see that when I'm on screen, that you get a little bit. It's kind of fun. It's fun. When I'm smaller, then it's cool and all, but I'm not too sure if I massively like it. So I'm not sure if this is the one for me or not. Although I like it, I'm trying it. I just like the comments coming up. Love to comments. Right. Ladies and gentlemen of the jury, I hope you find me worthy of another watch. Come back again in the future. Like, subscribe, massively appreciated. Anything that helps grow the channel is appreciated. If you share this video with your friends on Twitter, for example, then I would think that is a really big help for the channel. These things are really genuinely appreciated by me. I put a lot of effort into this because I want to grow a community for all of us to benefit from together. I believe we can do it. I believe I can do this. I believe that I can make something that really enhances the value of all of our lives a lot. Now, yeah, I'm putting a price tag on getting entry into that community for everybody from now on. And I think that that's a sensible enough thing to do, because we really want to keep the quality of person in there at quite a high level. And people who come along and risk more than the Patreon subscription in their trades and lose it happily, and then months and months later think to themselves, oh, I'll join that group there, they're probably not the type of person that we all want to have around. Whereas everybody else who's like dedicated towards what we're trying to achieve here is. And then, you know, the community can grow loads. And it wouldn't be fantastic if I could fling Tony, you know, some money for doing his Monday Neverland live voice talks that he does, and he's never asked for a penny for doing. In fact, when I've offered to give him money for doing it, he's refused, you know. And wouldn't it be great if I could now I could do that if I just wanted to run this whole thing as a charity, but I'm not crazy, so I'm not inclined to think that way. But but you know, anyway, so that's that. Yeah, just save money, not taking bad trades. That's it. That's basically all I really want. That's maybe I don't even want to promise people that type of thing. I'm not that bothered. I mean, join the Patreon if you want me to be here in 2022 doing this. Let's be honest, right? Join the Patreon if you want me to be here in July 2021 doing this, to be perfectly frank with you. I've really enjoyed it, but I swear to goodness that that while educating people is fun and everything else, that I have just as much and possibly more fun playing computer games, which I don't have time in my life for. I don't have time. I've played so little computer games for the last video games, I should say. That's what the kids call them. For the last couple of years, I would love to. You know, I would love to watch sports. For instance, I could watch movies and TV shows and talk about it. In fact, you know, I'm seriously considering dropping doing all of this and doing a Wheel of Time, which is a series of books, a fantasy series of books that I read when I was like 11 to 5th, 6th. Well, they only stopped making, like, they only finished publishing the series when I was in my 20s. But you know, I read it for a significant period of chunk of my life. Read back through the thing maybe 10 times. Or more, and listen to it in audiobooks and all the rest of it. And I could set up a YouTube channel doing that. I could get invited to go and talk at Wheel of Time conventions and meet other Wheel of Time fans and have, to be perfectly honest, more fun than I have in these live streams, right? Just talking about magic and stuff like that. Now, me talking about magic doesn't actually improve anybody's lives, whereas me giving people real skills that I know has made their life better is like an amazing thing. So the sort of you know, it's a kind of short-termism, long-termism type of thing. Now, whether or not I actually get to that long-term point of view, or simply have to stop because the people who invest in Picnic Network demand more of my time, and I can't spend this time here, for instance, that would be interesting. But I don't think that would be a likely outcome. I'll always have time for something. It's just about whether or not this constitutes enough of a letting your hair down for me. And to be honest with you, it doesn't. But you know, it will over time make it so it's worth it, you know. Over time, I'm sure it will. Anyhow, tuning on out for now. Thanks so much for everybody for tuning in. Really do appreciate it. I'll be back again on Friday. I'm aiming for around about 8 p.m. UK time. You can tell what UK time is if you just look at the charts for your cryptocurrencies. That's all done in UK time. So I'll be back around about 8 p.m. on Friday for that. Get your questions ready, line them up, and we can talk about something. I'll probably come in and do a completely freestyle episode instead, you know, because I also do prep work for these episodes, which is kind of, you know, almost pointless. Quite often I just you know, tell people what we see on the charts and do it together in a way to really show you how you can do it and give people confidence so you can see actually building up a picture with a clean chart to building it up. I've done that so many times. But also sometimes, you know, but quite often really I come along and I look at the charts before just to make sure that I'm going to be saying stuff which is valuable, maybe pick out some lesson. So you'll remember last week or whenever it was, then I did the whole Fibonacci trend-based Fibonacci extension tool, etc. I worked all that out in advance to like draw on, and show people with the wee diagrams I made and everything like that. And all that. So yeah, anyway, totally not worth it. Right. Anyway, but it will be at some point in the future, maybe. Can do any food, but no cutlery. What's that a little bit? Yes, it's a replicator. Ah, yes. Yes. All right, Rook Trade, good to have you here. So now, see, Rook Trade, for instance, though, he is the #1 patron. So, out of everybody sat there watching the episode and all the rest of it, I love yous and everything. But there's a guy right there who thought to himself, I could maybe benefit from this in some way, and as well as a good thing to do to help community, and he's really done it. So, everybody, well done to Rook Trade. He is a legend. That's a microwave eye. It's not a replicator, unfortunately. Damn it, like TradeSpotting said, that'd be much better, but it's not. So yeah, Drew's Tech. Well, actually, Drew's Tech. Thanks for tuning in. Good to see you. Rook Trade, good to see you there as well. Shame I didn't see you earlier on in the episode, or we could have chatted about stuff. It's late where you are, buddy. It's 1:30, right? Time for us both to go to bed, probably. With that, I'll catch you all later.